Are we Gucci? Is it on? Yeah, it is. It is. It is. Okay. 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 Are we Gucci? Should be good. Should be good. Let me change this a little bit. We'll run this back, right? Get the link for this. Dying. What should we call this? What shall we call this? Golden pocket bounce. How about that? Golden pocket bounce. Bounce. In terms of getting caught up, everything going according to plan, right? Everything going according to plan. Kind of the first zone we talked about. Exactly where we bounced at. Kind of just that ding, 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 ding. So whether you had a limit set here or you took like this setup, either way, you're kind of in this thing chilling with your stop break even right now. Worst case. But yeah, it came right down to negative point of control on CME. Literally pixel perfect and just kind of up only ever since. So right now I'm just watching yesterday's VWAPs more or less, right? Can we kind of flip these things, start training structure? We're not. We're not. We're not. We're not. Interesting that we didn't come get this zone, right? And all those spot orders got front run again potentially. The same people that were here that had other orders here potentially getting front run again, right? Other than that, not really much to talk about, right? Not really too much to talk about. This thing, same story over here, right? The indexes, it's bounced right at the point of control and just kind of up only ever since. And they were like flipping the VWAP here as well. Where is this thing? Kind of broke above and then ding ding. Sold off the middle of the day towards the end, but basically the same spot where we got off. Should be good, yeah. Should be good. Should we put this one on? The TPO is so fucking obnoxious on TradingView. I hate this thing. However I configure it, I don't like it. Do not. It's so obtrusive, right? Just visually fucking draining. Pissing me off. Anyways. The thing is, with the colors missing, it's like so hard to see everything. I get like 20 before. Anyway, let's update our levels and get going here. We'll change this color to what? Yellow. Actually, we already have a yellow one, right? Blue. How about blue? I'm gonna clean some of this up. Get rid of this thing. The levels. Yeah, I missed most of today though. I had to go to the doctor's office. And I went and did groceries, and then there's some other stuff for my house, so... Some of the trades didn't end up doing anything, but I might start closing the short here. If we start to reverse back up, I'm gonna just start closing that thing out. Let me just get everything sorted here, and we'll kind of throw those on the screen and kind of go from there. First and foremost, the levels. Shout out to the math. I'll do some stuff for my mom pretty soon here. Fuck. Inside day, okay. And my back is fucking cooked from the gym. 8-6, 8-3-8. So we got a new video to watch. 8-6, 8-3-8. From a trader in Canada. I'm curious if anyone I know knows this guy, Scarface. 87069. Thing is, everyone I know is not really a trader per se. Like they're all like actually work in finance. I don't know if they'll be too familiar in the same kind of circles of people. 857 61.6. Eight 4 6 4 2. Shout out to the math though. Shout out to the math of not cheap math, right? Right at the golden bucket. Also, this was funny. Where was it where you got off stream? Where was it? Like, right when I got off streams, this guy bottom ticked the 30 mil short. I was crying. In tears. Where's this thing? I think I was on this bounce, right? Because we started the stream here, so this would have been like 4 hours or so. Yeah. Literally opens a short, yee, immediately reversed. I was crying. Goddamn. Also, in terms of this trade, actually, you could have taken this multiple times today, right? Because there's also this thing that happened. Like the initial move down got both these levels, like this ding ding that cleared most of the box. if you took that thing, your average entry, let's just say you did like even orders and all this stuff, your average entry would have been like right here. If you had TP at the VWAPs, it'd be pretty like juicy scalp, right? Like, what would it ended up being? Yeah, like a 4 or 5 R trade, right? Just to the VWAP. Like obviously your stop wouldn't have started there right away, but gonna cut a quick glance at anything that we missed here while eating dinner. I made the most. My dinner was suspicious. We'll say that. Hello, sus. I actually didn't make anything. I was supposed to make ground beef burgers, and I got home from the gym and I just wanted to do absolutely nothing. So I got a pan, and just put all the ground beef in the pan in just a massive rectangle. And just cooked it on like one big fucking slab. Something pretty good though, actually, surprisingly. I thought it was gonna be like hella weird. So we're kind of just squeezing out some of these shorts on the move up. Okay. Near left to squeeze. Not much. Most of like closed. Interesting. Not here though. You know, interestingly enough, this whole move down, shorts have been quite well disciplined, right? You're not seeing any shorters getting trapped on Binance. Like they're either closing out break even or they're TPing quite aggressively. Interestingly enough. I'm so curious if the low is in for MSTR today or not. Saw a pretty big volume spike down there today after like basically like an exhaustion gap to the downside. We're not. Anyways, these are the current positions. Kind of dabble with this right now. So overall, not bad. In the ideal world, we would have been juicing up on just the longs ripping from higher when we were up here, but yeah, if we start going though, like especially if we start to flip like this zone. So right now we're doing like a 382 bounce, right? Let's just flip the Fibonacci around. Yeah, more or less. If we start going, we'll start closing out some of the shorts. If not, I'll keep it as is. Cause that's the thing. Today, like I wasn't gonna be around to manage these things, so I just left them as is, right? Which is kind of nice. It actually is very nice, right? Because you don't have to say you're stressing about what's happening in the market. And just lock in your gains and chill. Lock them bitches in. I don't think we missed anything too interesting other than like Apple starting to go, right? Other than that, I didn't miss anything too interesting. What alarms went off today? Yeah, we need to look at some of these. Cat, Unity. It's gonna be interesting to watch if this thing does like the retest and go. Interesting indeed. I'll put this there. Oh, we also have like the JP thing soon. Should we just toss on me, Kevin, watching him talk about him? Or can we find the stream ourselves? I don't know where it's gonna be. I don't think it's on like the Fed website, or, like the YouTube channel. I mean to do that. Well, from my understanding, you shouldn't be saying anything particularly important in terms of moving the market. I'll look at everything else too. We take a glance at everything else that's going on. We start getting candle closes above this stuff. Hmm. we want to do this. We have wound ourselves up, now we need to unwind. Mm. Is the Powell app live?
And then of course Powell. Nobody cares about anybody but Powell right now. We know that. Fortunately, we've seen a little bit of a rebound in Bitcoin. We obviously see this as a risk asset, sort of a little risk indicator. And futures, Shmeep, basically flat, so pretty much nothing going on there. Bond yields 4.08 on the 10-year, not great, that's kind of moved up a little bit. WTI is under 60.
Watching Kevin? Yeah, sometimes. I wanted to see where he was watching the stream, but I think I found it. AssociatedPress.com, seems like. He can definitely be a bit obnoxious at times, we'll say. Do we switch this then? He's alright. I have a lifetime membership I never use. I don't know, I've never gone on there. I mean, literally every single video he talks about it, just non-stop. Bull run time. Maybe, maybe not. How's everything doing, by the way? How do these hourly candles just print? Damn, Dow Jones, damn, seems like a week. Damn. Nvidia broke the downturn flag. I don't know, I don't trade patterns, so sure, maybe if there's edge in that, I suppose. So time is this supposed to be at? What is 5 p.m. PT? 5 p.m. 8? Dude, they're running late. These clowns. So while I have a Fed meetings right away, 8 o'clock, boom. Or 2 o'clock on the mic yapping. Not a second to spare. Nvidia or Jensen meets with the Senate committee Wednesday. He's always late. He's never late. Never late. Oh, I mean, I guess I don't know. Maybe for these like random events he has. I don't know. There's our boy JP. Let's mute this thing.
I want their picture taken with you.
I can do that.
And they've been at me for about a week. Got it. Okay. Scott, ready to go?
Turn this up. Damn, what was that?
Well, we could just enjoy the silence for a moment. I am Peter Robinson, the Murdoch Fellow here at the Hoover Institution. Welcome to the second of 3 panel discussions in honor of the late Secretary of State and longtime fellow here at the Hoover Institution, George Shultz. The first panel concerned Mr. Shultz as a champion of human rights. The third and final panel will discuss his contributions to foreign policy. This panel is George Shultz as an economist. With us, Mike Boskin, who has been a Hoover Fellow for about a quarter of a century, whose public service includes chairing the Council of the President's Council of Economic Advisors in the administration of President George H.W. Bush, and whose private work involves many board memberships, including longtime board membership at Oracle. Condoleezza Rice. I'll go ahead with the introduction just to be, I think everybody knows who Condi Rice is. Public service includes National Security Advisor and Secretary of State in the administration of President George W. Bush. Private service includes provost of Stanford University and director of the Hoover Institution, which brings us to the man who wins the award for the most distance traveled to join us here this evening. Jerome Powell earned his undergraduate degree from Princeton and his law degree from Georgetown. I should mention that at Princeton, he was a member of the same eating club as George Shultz and first became aware of the presence and career of George Shultz by having lunch under George Shultz's picture, correct?
Something like that.
Something like that. All right. Jerome Powell's government service includes service at the Treasury Department during the presidency of George H.W. Bush, his work in the private sector as a partner at the Carlyle Group. Since 2018, Jay Powell has served as chairman of the Federal Reserve Board of Governors. Chairman Powell will begin this evening with some brief opening remarks. Jay?
Thank you, Peter. Thank you, Condi. Thank you, Michael, and thanks to everyone for being here. I'm deeply honored to have been asked to speak here today about the remarkable legacy of George Shultz. And just to be clear right at the start, I will not address current economic conditions or monetary policy.
Oh, fuck this.
So I've been an admirer of George Shultz since my college years. I saw him then and now as a great role model. As I mentioned just a few months ago when delivering the baccalaureate address to Princeton's class of 2025, 50 years after my own graduation. As I told the graduates, when I faced the world after college, I had no real plan, but I knew that I wanted to combine a private sector career with public service. And I had in mind a few well-known public figures of the era, especially George Shultz.
Was that a joke, or is he actually not discussing anything like of importance other than just whatever the
whose
fuck he just
picture,
said?
as I recall, was on the wall of
So
the
we're not
Princeton
watching
Eating
this shit,
Club,
right?
of which both of us were members, the Quadrangle Club. George may also have caught my attention because my dad was a labor lawyer who represented one of the major steel companies in collective bargaining. Like George, my father had both a belief in the collective bargaining process and a deep respect for workers. So I followed George's career with interest through the years. It didn't occur to me that I would ever have the honor of meeting him. But I did meet him after I joined the Fed in 2012 as I visited Stanford from time to time. And I remember energetic economic discussions at group lunches in the conference room at Hoover. George was also kind enough to host John Taylor, Michael, and me for a chilly round of golf on a rainy March day. So today, our focus is on George Shultz's extraordinarily broad economic accomplishments. But I also want to celebrate the remarkable man and policymaker that he was, and several things stand out for me. He was a man who combined strong principles and unshakable integrity with common sense and practical problem-solving approach to policy. He had a deep belief in the wisdom of markets and a desire to let them work whenever possible without government direction. And that theme runs through many of the issues that we'll discuss today, including collective bargaining, wage and price controls, and exchange rates. But he was not an absolutist, and he saw that there are sometimes market failures that do require being addressed by public policy. As one of the most successful policymakers of his era, George brought the intellectual rigor of an academic to the practical, constrained, messy work of policymaking. Through 4 cabinet appointments, he dealt with many of the great issues of his day with remarkable success. And he kept at it long after leaving public office, making important contributions here at Hoover on healthcare reform, climate change, nuclear disarmament, and other areas. He may be less well known for this, but George Shultz was deeply concerned about racial discrimination in the workplace and in our society more broadly. He consistently and effectively used his positions of authority to increase opportunities for minorities. And he later noted that there was both a moral and an economic case for this. He stuck to his principles while also treating people with honesty and respect, including those with whom he had policy disagreements. Labor leaders welcomed his appointment as Secretary of Labor, and as many of his contemporaries remarked, faced with divergent views and difficult issues, he was extraordinarily good at steering people toward agreement. A key part of that strategy was to let the parties reach the final agreement themselves. That way, they owned the agreement and were more likely to honor it. His friendships and collaborations were beyond number and knew no partisan bounds. He often said that trust is the coin of the realm and that good things were only possible where there was mutual trust. His integrity provided the basis for that trust.
Is
All of those
print?
who
Is that
aspire
what
to
a
serve the
vector can was
public
basically a single
can
print?
learn from his
What I'm
example.
understanding.
Thank you.
Where the fuck do these names
George
come from?
Schultz's professional
Vector,
training,
candle,
labor
bare value
economics.
gap.
Mr. Schultz earned his doctorate from MIT in
relabeling shit over and over,
1949,
I guess.
taught at MIT for 9 years, then moved to the University of Chicago where he served for 11 years, 6 years as Dean of the Business School. Jay, labor economics, the importance of labor in the last century. Help us reconstruct that intellectual world.
So it was such a different world. Private sector unionization today in the United States is under 6%. In those days, it was around 30%.
Gotta flush
And
out that leverage, no matter
collective bargaining for the major manufacturing unions
can
in
say that- you can
steel
say
and
that for
autos and
both
things like that,
directions, right?
that
Flush
was
out longs,
front
flush
page
out
news
shorts.
everywhere. The job of the Secretary of Labor in any administration was to know the labor movement, know the leaders, and understand what they wanted. It was a very, very different time. And of course, George Shultz had studied collective bargaining. That was one of his main topics in his work as a labor economist, and he was extraordinarily well qualified to face the challenges of a labor secretary, and indeed went to Los Angeles to talk to President-elect Nixon, just to make sure that President-elect Nixon knew what George's views were on labor economics.
And he's a labor economist. This is the middle of the last century, when there's a great debate about labor taking place in the world. The communists had a certain view about labor. Workers of the world unite. This is Mr. Schultz. I'm quoting an interview he gave when he was here at Hoover, looking back over his career. The Chicago School stood for the fundamental value of freedom and free markets, close quote. Mike Condi, how did he integrate this belief in free markets into labor economics?
Yeah, I think we're gonna skip
Well,
this. Yeah.
let me start by saying
the
that
fucking TLDR
when I was
after the fact.
asked to be Secretary of State by President Bush,
So I don't even know if they're gonna say anything worthwhile in there.
This guy has mastered the 1 minute time frame, and you can too. I had one trade that we're going to talk about today. It was a $100,000 Tesla trade. This is the one candle rule. It was a swing position on a higher time frame using these exact same concepts and strategies that we're going to talk about, but that trade was not a 2R multiple, right? That trade was, you're a brand new trader, or you've been trading for a little while, but you haven't really seen that consistency. I typically recommend, this is called fake out liquidity. A lot of ICT traders use that as well. For me, I try to keep my stuff pretty simple. So I would get rid of this. And what I'm looking for is just
Introducing Scarface Trades. In this episode on Chart Fanatics, Scarface goes through the 60% win rate scalping strategy that has allowed him to make over $3 million.
There's a lot of traders even that ask me, they're like, well, for example, if your strategy or your system works so well, you have a high win rate, whatever it may be, why can't you trade every single day? My win rate is high because I don't trade these days. It's high because you don't have to come into the market every single day looking for a trade. You let the trade present itself, like I've shown you in these last two setups. These trades presented themselves to me. Here is the final trade that we're going to be talking about today. This is the one candle rule. This was a Tesla trade I took. This was a $100,000 trade, but how did I set this up to actually make that money? And what did I do that helped me stay in the trade? That's the key as well, because you'll see in the price action here, most people would have sold either too quickly or too late. What did I see in Tesla? There's a couple confluences I want to talk about before the one candle rule. Number one.
Yeah, they mentioned
Hey guys,
that.
before we get
Oh, I
into
made
this
100 grand
incredible
this trade.
episode,
No
I want
one
to say a
fucking
massive
cares,
thank you for
bro.
all of your support so far on both Words of
Irrelevant.
Wisdom and Chart Fanatics. We have grown immensely and are
baiting.
still the fastest growing channels in the trading industry. Now, a way to give back to every single one of you, if you want profitable...
Where's Jay Powell? Turned it off for now. I don't know. It seems like they're just doing some kind of memorial for some fucking guy that died. So...
market. This is supposed to be a nothing burger, but if you listen closely, there are actually, there are references here that they're purposefully highlighting.
Stood for the
being the Secretary
I'll watch
of
it
State.
later when it's like 2 times speed, so I'm gonna skip all that
strategies
useless shit.
completely for free. Go to chartfanatics.com, the link's in the description, put your email in, and every single week we will send you a free PDF with a profitable strategy of the guests that we host. As well as on the website, you can go straight there and you can go through the library of strategies completely for free. Just input your email. On top of that, we launched a Chart Fanatics free Discord community that has already over 10,000 members of traders across the world. We have our live traders and free subscription.
Percent is going to take a couple too many. He has made this guest over $3 million today, and he is going to break down the exact strategy step by step. It's the one and only Scarface Trades, aka Tony, aka Raf.
Appreciate you having me.
You have too
on.
many names, my friend.
I do have a couple too many names. Even in the last podcast we did, you called me by like 3 names, and people were like, "What's his name?"
Don't worry, everyone thinks my name is Rizwan, but it's not. So at least they will get yours right. But we're here, as I said, very excited for this strategy. Because not only do you provide so much alpha to the community already, but you've done phenomenally well using the exact strategy. That's the $3 million. That's no joke. And the stats back you up as well. An average of a 60% win rate. You said just before we started, actually, over the last couple of months, it's been higher at 80%.
Yeah.
Right, and that's amazing to hear. But where should we begin?
So first, I just want to break down what the actual system revolves around, and then we can get into some of the playbooks and the actual setups that I trade. So first, let me start this off real quick and apologize my handwriting before. But so, for example, when you first start trading, the main things you learn is that you have resistance and you have support. So in between resistance and support, what you have is just price action, right? So the stock's literally just going to look like this, okay? Now, when a stock's like this, what does this actually mean, right? What does the resistance mean? It means that there's sellers that are overpowering buyers up in this area. But then when every single time it comes down into support, what does that mean? It means buyers are overpowering sellers. So they want the stock to hold above this level and sellers want the stock to hold below this level, okay? So that's like the most simple way to explain what this chart is doing or what stocks just normally move, okay? Now, if I asked you what happens if the stock breaks above, what are you doing in this scenario?
I'd probably look for a retest.
Retest, right? Now, why would you look for a retest? This is because when you have this move right here, this doesn't actually validate anything, right? Because this move could actually come right back down and fail. This is called fake out liquidity. A lot of ICT traders use that as well, right? For me, I try to keep myself pretty simple. So I would get rid of this, okay? And what I'm looking for is just the extended move back into the resistance, which is now turned into support, right? So now that resistance that we previously had, right? We can make this green. This is now support, right? Vice versa, if the stock theoretically came back down, right? This support
It's basically the same shit we always talk about, right? Everyone is the same shit, right? In the day, you can fucking label however the fuck you want. Just a bullish retest of the value area high of this value zone, bearish retest of the value area low. Also, it's not necessarily true. If you're trading like a weekly breakout or like a daily breakout, you do not want to wait for the pullback. And if you do get a pullback, the probability of that breakout working out is not very high.
Resistance for that downside move, right? So in the most simple way, how are buyers and sellers interacting with a market? And so a lot of people will be looking at pattern trading. They'll be looking at one specific thing. Maybe it's like, for example, like a bull flag move and then continuation, right? However you look at it, that's fine, but understand what's going on behind the scenes, right? And that's the most important part, understanding the context of why you're trading, what you're trading. Now, so like I explained, right? Let's say we have resistance up here, right? We break out, we retest, right? So this is, let's just say it was consolidating, right? And it was coming back to the upside. Now, in this scenario here, okay, we know this is first resistance, now turned into support. Now, at this support level, what are you doing? Are you just going to buy it mindlessly, right? What would you do in this scenario? Like, what would you wait for?
I would hope to wait for confirmation, I imagine.
Confirmation.
I imagine there's people out there who would just buy.
Exactly, right? So this strategy, in my opinion, is extremely simple to understand. However, there's a couple factors that make it more high probability. Like, you're not going to get, a 60% win rate just buying the retest. That's not how that works. So now in this area, we have to wait for some level of support to form or buyers to basically tell us that they are stepping in and overpowering sellers. Because we know if it breaks back below, right, then what happened? That means sellers overpowered buyers. Yep. Okay, right? So if we use this example right here, let me get rid of this. If we use this example right here, this is where we have to understand price action just a little bit, right? Now, for price action, some people use order flow to understand what's actually going on each candle. I think that's a little bit overkill. It works, but for me, it just, because I'm trading so fast, I need to understand what's going on right away rather than waiting for too much confirmation, right? Because you don't want to hesitate on the entry either. So for me, what I'm looking at here is buyers to step in near this level, okay, and show me, right? So for this candle, for example, what does this show us, right? This shows me that the stock or the candle opened up here, okay? We brought it down. What does it mean when we're bringing it down? It means that at this level, sellers were overpowering buyers.
Bro, this guy's really
And
explaining
then
a
when we
hammer
bring
candle.
it back up from the lows, all the way up here, this is a hammer stick candle, obviously,
Fucking kill
right?
me,
If we
man.
bring it all the way back up, what does that show? That even though sellers were stronger than buyers at one point of this candle, buyers were still able to hold it above the key level, which is the resistance now turned into support. And we can clearly see that there was a fight between sellers and buyers won. Okay, so now that we understand this, this is where I'm taking my entry, right, for the continuation to the upside. That's the most simple way to explain the system that everything revolves around. It's simply the
This guy could have said
buyers.
all this in one fucking sentence, right? I look for like a candlestick pattern that confirms buying strength. Boom, problem solved. I don't have to sit here for like 5 minutes giving us a whole spiel, bro.
And sellers and the interactions of simple support and resistance. Now, I just want to preface this as well. Some people, especially, I feel like nowadays a lot of people trade ICT, SMC, maybe even more complicated strategies. For me, the one thing I realized works really well is, especially if you're a new trader, when you are trading those strategies, it may be a little bit harder to understand the entry model because, for example, like I'm sure you've seen, there's some and I'm not saying this doesn't work. It definitely works, whatever it may be, right? But like there's entry models, right, where like you need to have like 6 confirmations of price going up, then coming back into like a fair value gap, then making another order block, like whatever it may be, right? And for me, that just doesn't work. So for me, what I've realized works, simple support and resistance, and understanding this is the most key, the interaction between buyers and sellers, okay?
What time frame are you observing sort of this price action and interaction on?
Sure. So when we get into the examples in this video, I think it'll be very, very clear for everyone to understand exactly how to trade this strategy. But for this specific scenario, you can trade this on any time frame, any instrument, and any market. For me specifically, though, I trade from 9:30 to 11 a.m., right? And that's Eastern time. So I trade from 9:30 to 11 a.m. Eastern. That's the only time I'm looking at it. It's the New York Stock Exchange open. There's a lot of volume, and so I can be done the day pretty quickly. Now, in terms of the time frame, I primarily trade on the 1 minute time frame. Okay, so when I'm looking for my entries, I'm looking for the 1 minute time frame. However, once again we get into those other playbooks and the setups that I actually trade that revolve around this strategy, there's always going to be the different time frames that we're looking at, and that's just so we have a better clue and context of how the market actually moves.
Definitely. So you're not just looking at support and resistance that's formed on the 1 minute time frame, and then looking to execute based on the retest and confirmation. There's more context around that depending on the playbook.
100%. So the reason I wanted to explain this is just so you understand what the system entails, what it is, how it works. But of course, it'll get a little bit more advanced. We're going to try to keep it as simple as possible, but it will get more advanced than this, just because you have to understand, if it was as simple as resistance breaking and buying the support, anyone could do it. There is context behind this trades, and when we get into real examples, it'll be much more simple to understand. But for right now, what we need to understand is just simple support and resistance break. Now, this was the bullish example of that.
One thing I will say is quite interesting you mentioned that, because I think people hear simple and they assume, oh, you should be able to just break it down in 2 minutes. But the reality of it being, yes, it's a simple concept, but if you want to learn something, you still need to learn it in depth, and we're going to explain it in depth every single time, regardless of what you may assume is simple doesn't mean quick. Simple just means that it will be, as you pointed out perfectly, it's not a system that requires 6, 7, 8 confirmations and different things to be able to identify and execute your trade. And I think that's quite powerful, because for some people that might be what they need, right, to have the confidence to execute. But for a lot of people, I imagine it will actually hold them back because of the amount of information they need to process before they can even take action, by which point a lot of the time they probably will hesitate because of the amount of things they're trying to look for, and the being able to confirm them all together as well, I imagine is probably hard to spot within a market, especially when it's moving so fast.
So to answer your question, right, one of the main things, like you mentioned, is for me, when I first started trading, I was still a teenager at the time. And so I tried a bunch of strategies. I've tried literally every strategy to find one that works for me. And I always come back to simplicity equals profitability. And that's simply due to the fact that when we have fast moves in the market and you're looking for 100 different confirmations, right, even for example, right, let's use this bearish example of this support and resistance to kind of come back for the retest, right? Now, if it's coming back for the retest, let's say it's making a candle that's weak like that, right? Now, if I'm looking for this, and then I'm also looking for volume, and then I have another indicator coming in here, right? That's just too much noise for me personally to be looking at all of these. And then, especially if you're on the 1 minute time frame, looking at all of these and then looking to enter, it's just, you're gonna either hesitate on the entry or you're gonna be too late to the entry.
I never played a
so
video
for
game.
me, one of the main things is this right here, this setup. The only thing that you really want to focus on, like I said, is buyers and sellers interaction, but that happens through the candlesticks and understanding price action, right? So understanding price action for me is key. And similar to how you said, you don't want to hesitate on the entries. When we get to the pros and cons of this strategy as well, we'll talk a little bit more about that as well, but you do not want to hesitate on the entry, because the entry is where you're going to make the most money, and then your exits, obviously, we'll talk about that in a second as well.
Up to 6 million in futures funding.
That's true, though. It is
possible
true.
for-
We talked about this the other day, but like,
and
yeah,
JCap.
hesitating on this stuff, especially when you're on the 1 minute, is like there's a very big difference, right? The whole risk reward of trade changes due to hesitation.
also done over
Can't even speak. Due to hesitation.
100% capex linking to that.
Side. In this example, what are we looking at, right? So we know previously we were looking at that break and retest to the upside. In this example, it's the same thing, right? Now this one, right? For anyone that knows price action, this is an inverted hammer stick candle or a shooting star candle, whichever one you want to call it, doesn't really matter. But what does it show, right? This shows now at this point of the video, you should understand sellers are overpowering buyers on this whole candle, okay? Buyers did try to bring it up. At one point, this was a green candle, right? So at one point, just to kind of demonstrate how this candle looks, this candle, when we opened up right here, right, it moved up like this, right? So it was a full bullish green candle, right? But then after we started coming down, now all of a sudden, right, the candle made this wick, and then of course we moved to the downside, and then it became a red candle, okay? So understanding that is really, really important of how the candlesticks form. And now once we have this, we're looking for weak price action, we got the weak price action, and then we're looking for a move to the downside. Now, once again, the key here is also the risk management. I personally like to go for at least a 2R multiple. Now, this means for every $100 of risk, I'm looking to make $200 of profit, okay? In the most simple terms, that's what I'm looking for on an average trade. I have trades when we get into the examples. I had one trade, for example, that we're gonna talk about today. It was a $100,000 Tesla trade, right? It was a swing position on a higher time frame using these exact same concepts and strategies that we're gonna talk about, but that trade was not a 2R multiple, right? That trade was much, much higher in R multiple due to the fact that if you use this strategy, right, you can scale out some at, for example, low of day. At this point, right, you can scale out anywhere from 25% to 50%, right, at low of day. Now, low of day may give you potentially maybe even a 1.5, right, to that 2R that we're looking for. But low of day, for me, right, I take this because this is simply locking in realized gains, right? So we're just gonna do real gains. Right, real gains, right? This is simply locking in that real gains that we want to see because your account is not going to compound if it's a small account, if it's a big account, it's simply just not going to compound if all you have is unrealized gains, right? So we need to always lock in profit. For me, that's that 25 to 50% at that low of day level, depending on how strong the market is. This strategy is very based off of the context of the market, which we'll get into with the examples, but this is overall the actual system behind the strategy. We're looking for that 2R, right? We're looking to scale in and out of trades. We're looking for that lower time frame entry model, right? And then we're also just looking for
this guy is fucking just yapping up a storm right now. I can't. 20 minutes in to talk about a bullish and bearish retest, like, bro. I don't know if I can fucking do this.
So the system is very clear now. But now let's talk about the 3 setups that we actually have within this.
Before we move on, just to really highlight, and I think it's very important because a lot of people may hear shooting star or inverted hammer and assume, oh, that's just the basics. That doesn't work. But in reality, it's not about the, as you said, the name. It doesn't matter what you call it. It's what you pointed out, which is the interaction. What does it represent? Because I think you mentioned earlier, some people will go into, say, order flow and start going into trying to identify exactly where those buyers and sellers are and how many and, the difference between them, which is obviously powerful and useful for those who, sort of resonate with that. But it's not necessary, as you've shown, because the candlestick itself, if you're able to identify and be able to actually resonate with what's actually happened and understand it, as you pointed out, is what's important, right? It's not about the title of it. It's not necessarily about having to make sure you have the order flow and you're dissecting that chart. It's actually just making sure
you can already tell this guy's low rank, right?
And so what that
like
represents,
the fact that they're
some
saying all this shit
and then bodies
like,
and then all this, but in reality, again, what does it boil down to? And as you mentioned earlier, some people will argue like SMC is a better way to trade or this. And I've always said that every type of trade, you're in candlestick closures or candlestick pattern names and assume how well you can interpret that, the buyers and sellers and the interaction between them. They able to push price higher and the sellers took over.
Like, if this guy's not using level 2 data, he literally has no clue what's happening down here. He's just flying in the fucking blind. This guy's telling me he's gonna take a short here when there's like fucking 200 mil of bids stacked right below the fucking price we're at right now.
That's what matters, that interaction and that understanding of that interaction. And then obviously accompanied, I think that's a really important point you made actually, in terms of, yes, you have your strategy.
Hopefully he addresses
what
this
matters
later.
Afterwards is then how you utilize that strategy, the rules around that strategy. Because I think a lot of people put so much weight into just the strategy itself that you're learning versus that alone won't make you profitable, right? It's about how then you build your rule sets that creates a system, an edge. And then, of course, there's your trade management, your execution, etc. But yeah, sorry, we can move on.
Yeah, no, well, I was just going to say, based off your points that you just made, that's really important to mention. Now, the reason I said order flow earlier is because when you're looking at order flow, it's the same thing, right? You're looking at what's actually going in the anatomy of the candle, which is good. If you want like super precise entries, you can look at that. That's completely fine. If you're using that.
Okay,
For me, though, the thing is, especially if you're a newer trader, you want to basically look at what's going on the actual price action candle. Because at the end of the day, even when you're using order flow, right? Yeah, you're using, the order flow, chart looks like this, whatever it may be, right? But it's telling you the exact same thing. These two things will be telling you the exact same thing.
Doesn't know what a DOM is.
Right? And you can still have
Is this guy a LARP? Is this guy actually a LARP or something? Like, he doesn't even know how to call the DOM a DOM? This guy might actually be a LARP.
Have that exact pinpoint entry where buyers and sellers are interacting, but it'll be so close where over the long term, which we know trading, long-term stats matter the most, right? Over the long term, you're going to have the same stats, right? So that's the key based off what you said as well.
That's not true.
Now, let's start talking about some of the actual setups. So the first one we're going to talk about is going to be the one candle rule. So the first setup that we're going to talk about today is going to be the one candle rule. Now, we already know, I already said the basics, right? What we're looking for is a stock to break out, retest. That's simple, okay? Now, what does a one candle rule entail? So if we have, for example, a resistance at, let's say, $100, okay? And this is a resistance. If we have a stock coming up to this level, okay, moving up, and you can see these upper wicks kind of coming in on the stock as well, right? Stronger push up, right? Upper wick. And then when it comes up into this resistance level, we do this, right? We have that down close candle there, right? We may put in another down close candle here as well, right? And then buyers decide to bring it back to the upside. Okay, so we bring it back to the upside, just like that. Now, when we're looking at the retest, what do we want to look for? We know that this was first, like I talked about, resistance. Now it's turning into support over here, okay? Now, what is a little bit more like we talked about?
The Powell thing? Is it done already? Yes, he said right at the start he wasn't going to be commenting on anything related to like the economy or whatnot. I don't know if that was meant to be like a joke because like they're all there to listen to that, or like if he was being serious.
Another University of Chicago person.
We're still going.
And it was on Guide.
The chat is just spamming alt season in this fucking Jerome Powell video. Oh my god.
About confirmation, we're looking for those entries. Just support and resistance is fine to understand the system, but that's not how I'm entering based off of my actual system, right? So, or strategy. So when we're looking at this, we know
a lot of hesitancy. Yeah, I mean, look, it's not supposed to, but I think like, because right now it's like a blackout period for the Fed. But I suppose that means that they just can't comment on certain things.
that the stock needs to come back into this level. That is key. We already know that. But what gives us more confirmation or maybe even a little bit of leeway to enter the stock? Because if we're looking at support and resistance, this is a line, right? We're not going to have the precise entry right on that line. We need to have some sort of, for example, we need to know where our stop loss is. We need to know where our exact entry is. We need to know it's not going to be the exact, candle or the exact resistance turned into support, right? So when we're coming back, we have to understand.
This is literally the comment section right now of that video. Alt season, pump it or dump it, we're going to 0. Alt too old to listen to any more of your backstories. Spit it out or quit. People are hating on JP. Hating on JP. Oh, we gotta rewind this a bit. Also, I couldn't have used a different color marker for this. Is it just me? Is it just my monitor settings, or is this shit hard as hell to see?
This is a line, right? We're not. Right? So, or strategy. So when we're looking at this, we know that the stock needs to come back into this level. That is key. We already know that. But what gives us more confirmation or maybe even a little bit of leeway to enter the stock? Because if we're looking at support and resistance, this is a line, right? We're not going to have the precise entry right on that line. We need to have some sort of, for example, we need to know where our stop loss is. We need to know where our exact entry is. We need to know it's not going to be the exact, candle or the exact resistance turned into support, right? So when we're coming back, we have to understand buyers and sellers. This previous red candle or down close candle in this bullish one candle rule, what does this signify to you?
Signifies that sellers try to step in and hold price below resistance.
Exactly, right? So this was a resistance, sellers try to step in. Now, if we move this over, right, just like this, right, we just kind of mark this one out, right, like that. Now, when we come back, we know that there was sellers here, okay? There was sellers here trying to hold us down. So this next time we come down, what's going to happen, right? Buyers already brought it up here, right? So sellers were there, buyers brought it up, so they took out their orders, right? So their orders are now mitigated, and now buyers stepped in, and they're overpowering sellers. So when we come back into this area, what we're looking for is to hold, yes, the resistance and support, but more importantly, this one candle.
Interesting.
Right? One candle. That's all it takes. We're looking at this one candle. And once again, this works on any time frame. I specifically trade the 1 minute. You can trade this on the 5 minute. You can trade this whatever you want, right? I know traders that trade this on the 15-minute time frame, 1 hour time frame. It works the same. Now, when we're looking at this kind of pullback entry in here, right? Now that we understand what the one candle rule is, right? What are we looking for? It's not just coming back into that area, right? It's coming back into this area. Okay. Let's say something like this. make a smaller candle, and then it comes in here, right? It puts in that wick. Now, you can see for me, one of the main things when I'm looking to enter, right, we'll zoom in on this a little bit closer, right? Something like this. This is what we have, right? When this candle was developing at first into this one candle rule, right? Let's just say the one candle rule with like this box right here.
Yeah.
Okay, so we're just zooming in over here. So when this candle was first developing, right, this was a bearish candle to the downside, simply like that, right? Now, the fact that this was a bearish candle to the downside, what does that show? Sellers, once again, overpowering buyers. That's fine. We understood this. At this point, you should understand that concept, right? But then when we brought it back up, right, and the candle closed like this, what does that mean? Buyers stepped in. But what's important about this and what you need to understand is waiting for the candle close. You have to wait for the candle.
You still on that BTC along? Yeah, I wasn't really home most of the day today, so I just kind of left them as is. But I'm going to start to close out the short. I'm waiting to see right now, like if we start to flip this level or not. I'm kind of waiting to see like if we flip this thing and start going. If we do, I'm going to start closing out the short. It's still a hedge right now, so either way I don't really care, but since I wasn't going to be around today for the most part, I just kind of left it as is. But yeah, kind of just waiting to see if we flip this 382 value area high or not. Yeah, this was quite the candle. The thing is, like, most of the liquidity is by a single print, so like we didn't really do any whole lot there in terms of like a liquidity grab. I mean, let's just kind of double check to see, because there was a bit. We grabbed this cluster, but there's like more up here. This is at like 88.1. Yeah. I'll kind of just wait and see what's going on, right?
Closure before you're entering the trade. That is
Probably
key.
listen to this guy yap.
Is waiting for the candle close. You have to wait for the candle closure before you're entering the trade. That is key. If you don't wait for the candle closure, this candle hasn't, every single candle that I've shown you here, right? All of these candles have closed. When you're back testing your trades, right? If you're back testing your trades, most likely you're waiting for the candlestick to close before you're looking for that entry, no matter what platform you're back testing on. Some people may not, but for majority of traders watching this, I know you're waiting for candle closures. But then when you go into the real market and you're looking for this, you're not even waiting for the candlestick closure, right? You're just entering based off of the fact that it's touching the level, or maybe it may even look like this, right? It may look bullish, but then in the very last 10 seconds, it may come back down, right? So like, exactly, right? Like for example, if that was a support, it may still come down and close below that level. We don't want to do that. So waiting for candlestick closures, once again, I trade on the 1 minute time frame, so you just got to wait a couple minutes here, right? Waiting for that is really, really key, okay? So one candle rule, knowing that sellers were overpowering buyers first, then buyers stepping in, buyers need to hold this above here, right? Now,
does it have to hold above the one candle rule sort of area, or the support resistance line?
That's a good question. So when it holds above both, right? So let's do that over here. When it holds above two of them, right? So it holds above the support and it holds above this. This is a super bullish trade, right? And this could be considered an A+ setup, right? So the A+ setup is if it comes back and it holds below both levels, right? Now, if it holds above one,
how is it defining this line? Because he just kind of drew some arbitrary line, said it's at $100. Like, how are you defining this exact fucking line on the 1 minute? Curious how he goes about doing that. I mean, like, I guess in this case, if you're kind of looking at this, it'd be this. He didn't really elaborate on that. Like, does it include wicks? Does it include candle closes only on line mode? Like, how is he going about doing that?
is, let's say 1, which is maybe support or resistance, or the one candle rule. Well, technically, if it holds above support and resistance, it's holding above the one candle rule. But if it's holding above the one candle rule, you have to be careful, okay? Why do you have to be careful? You have to be careful because now you're looking at price action. So let's say, for example, we're going to zoom in on this example here, once again, over here. Okay, actually, let me erase this last one here. So it's like this. Right, so this is the one candle rule, right? This is the box, and then we had the support in here as well, okay? Now, let's say in this area, the stock came down and it held the one candle rule like this, right? So the candlestick closed above the one candle rule over here, okay? But it didn't close above the support and resistance, right? In that scenario, you're waiting just a little bit more, okay? You're waiting for the candlestick to show you buyers re-stepping into the stock, and then you enter. right, to have that really, really high confirmation entry. Now, to make this, we'll talk about this when the examples come, but if we were to make this a little bit more advanced, obviously there's a couple things you can look for, such as higher time frames. So if you were, for example, if this is the 1 minute, but the 5 minutes looking really, really bullish, then of course you can come down and maybe take that more aggressive entry. But this would be the most conservative, safe way to play, and that's just basically waiting for it to break back above the support/resistance, and then also coming back into one candle rule and showing the buyers are stepping up.
I got you. Yeah. So it's just having that, if anything, extra patience. We already explained how hard it is to maybe just have patience for one candle to close. So in this case,
so patient,
you need
1
to wait
minute
for it to turn
candle.
into. Would it still be classed as an A plus once it confirms, or is it more so? It's still a good setup and obviously valid trade to take, but the A plus is reserved for when that one single candle has managed to come down and then close above.
So let me ask you a question to answer that question. So let's say, for example, right, let's say for this one, let's say, right, when it comes up, right, what really happened here? On the 1 minute, sure. On the 1 minute, right, we closed below.
Yeah.
But what is a 2 minute looking like? What's a 5 minute looking like? You know what I'm saying? So on the 1 minute, this is an A plus example for sure, right? Because on any time frame, because it's doing this on the 1 minute, it closed above that level.
Yeah.
Okay. Right. But on, for example, the 5 minute, this still may be an A plus setup because technically the 5 minute candle didn't close.
Gotcha.
You get what I'm saying? So it depends on the context of the trade at the time, right? It depends on what the other time frames are doing. But in my opinion, that's still a really good setup. I'd still classify that as an A setup, maybe not an A plus setup, depending on what the 1 minute's doing, what the other time frames are doing. But I'd still consider that a good setup.
Let's take a break for a minute there, guys, because I want to tell you about the best CFD prop firm in the entire.
Interesting that that's an A
DFD
plus in
run
his
through
mind.
all
Of all the potential trades available, this 1 minute retest is an
Incredible
A
thing.
plus. Unless he must only scalp. Oh fuck.
And then just coming closures, but conservative, safe way to play, and that's just basically waiting for it to break that more aggressive.
So in this case,
For 1 minute, technically the 5 minute, up depending on.
Yes, and every industry, a no market way to 4. You can challenge fade same amount as your challengers. News trading is allowed. There's next. Let's get back to the CFDs. You are then 24 out to get.
and that's what notice focus on. But as
Now let's get back to the episode.
in terms of, I know you use this on the 1 minute, and that's what we're focused on.
Why are you
But as
hating?
mentioned,
Why are
like
you
knowing
hating?
traders who use different time frames. Is there any differences you've noticed at all when it comes to using higher time frames? When it comes to
The
execution?
futures 1 minute means a lot. Yeah, but like to most people that trade size, like an A plus setup is like this, right? Like the tariff nuke or something like that, or like the SanDisk blow off top, or like whatever. Let's just look at like a Rigetti. Like these are like the A plus setups, right? Where you're putting in hella fucking size into that trade. And then you're juicing a mega move the other way. Like on the 1 minute, you're not doing that, right? But I mean, whatever. If this guy only scalps, then like whatever, fair enough, fair statement. I guess in that world, it is like an A plus setup. But I like to look at it from like the totality of all trading styles. Beyond Meat booming today. Is that thing still hanging around? Yeah, quite the little pump, right? Interesting. Pretty strong day. It seems like it happens like relatively often on this thing. Every once in a while, just eat. Interesting. Can these things start flipping the VWAP and going, or no? We're not.
So for this, once we get into the example, so this exact strategy basically was the reason that I was able to make $100,000 on the Tesla trade that we're going to talk about. It's a swing position, and that one was on the 4-hour time frame. So we'll talk about that when it comes
You
into that.
drop a
But this
50
exact
lots, the 3 minute candle pump, you make a lot. I mean, sure, but you're also like risking a lot on like a pretty low probability trade relative to the other thing. And the day it is like it is the 1 minute, right?
This is the only example that we did have a higher time frame for. The other ones we're going to talk about lower time frames. So if you're scalping, right, it's going to be easier for you if you have a job, if you have you have work, other commitments. The other systems and this strategy does work, right, for that. But if you want to swing trade as well, right, then this is going to go.
I mean, to be fair, like, I guess in his defense, I forgot to consider the fact that he takes this setup on any time frame. So you probably can get pretty juicy moves out of this.
You mentioned earlier though that you're trading only between 9:30 ST to 11, right? Is that where you specifically can use this, or is that just the window of opportunity you like to focus on?
Yeah. So when we're looking at 9:30 to 11 o'clock, there's a couple reasons I trade that, right? So the number one reason I personally trade that is because when you're looking at the New York Stock Exchange Open, where is the most volume in the day, right? It literally stops at 11 a.m. After 11 a.m., there is basically there is volume, right? But you're gonna have there's no way I'm trading the 1 minute after 11 a.m., right? The 1 minute is really good right into the open, quick moves, quick volume, fast
My
moment.
boy owns too much Microsoft. The dividends $1 billion a year.
Momentum in and out type of thing, right? But and especially if you can catch a good trade like this, for example, let's say you catch this at like, let's say this was like, for example, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 minutes into the open, right? If you caught this trade and this was a momentum day, sure, we talked about, right, that 2R multiple, right? So this may have been the 2R multiple at high of day, right? You sell 25%. But now for the rest of the day, you don't have to monitor the trade. Let's say you take 25% out there, 50% out there. You already realized, right? You put your stop basically right here, right? Your stop doesn't change because market structure doesn't change. And then you just continue this trend to the upside. So yes, I trade from 9:30 to 11 a.m. That's when I'm looking for an entry, but I'm not necessarily looking for an exit before 11 a.m.
Got you.
I may ride this trade all day.
No one really trading after 11. Yeah, but you were saying people only trade the first like 20 minutes or something like that. Most people trade from like until like the 10:30 shift happens. Now a lot of people also trade at the end of the day, right? With all the market on close orders. Like there's like a massive volume spike when the market closes. Like look, massive volume spike, massive volume spike, massive volume spike. Like usually the biggest volumes at the end of the session. If you go back, every single session ends the same way. Boom. Some people trade after lunch. Yeah, I like the 1 o'clock-ish window as well.
Day, right? Considering on how much strength it has, looking for that upside move. You get what I'm saying? So this is the bullish one candle rule. Once again, this is going to make much more sense when we get into the actual examples, right?
Bearish would just be the other way around.
And bearish simply would just be the other way around.
I mean,
So we don't
makes
have to
sense.
make this
Makes
like a
sense
whole
as
other
is.
thing. All we're looking for bearish is literally for example, right? All we're looking for is the down close candles now, okay? And then the up close candle here, right? Something like this, right? So if this was support, the stock basically just has to break back below, retest into this level, right? And then you just mark out this level right here. This is now the one candle rule looking for the downside move. That's simple. Okay, so that's the one candle rule. We'll talk about this a little bit more in the next examples, but let's go over to the next setup. So the second setup we have here is the first candle rule. Now, what is the first candle rule? For the first candle rule, what you're going to do is there's two ways to play this. We're going to talk about the new way that I've started playing this because for anyone that's watched me before, you guys know the 5-minute opening range. But if you haven't, right, we have the 5-minute and the 15-minute. Now, this one I've just started talking more about online because I think it's more precision, especially in this market that we are in currently. And so for the first candle rule, right, what you're going to do is you have your first candle of the day. Right, so your first candle of the day. You're going to mark out the high of that candle, okay? And you're going to mark out the low of that first candle. Now, you may ask, what candle is this? This is the first 15-minute candle. Okay, so the first 15-minute candle from 9:30 a.m. Eastern time, right? So 9:30.
Futures is different because futures are actually giving direction for those trading stocks. Once the stocks are being traded, the futures kind of have less leverage over the markets. Because futures are actually giving direction for those trading stocks. I'm not sure what you mean by that. Because futures are actually giving direction for those trading stocks. Futures dictate the moves for the market open. Is that true? I don't know if that's true. Like there's all kinds of things that like open green or red throughout the day, depending on the actual like stock itself. I just look today through some of these randomly. Like open red, open green, red, green, green. That's on the TSX, so we'll ignore that. Green. That was red. This is green. Green. Red. Yeah, I don't know if that's necessarily true. I don't know if that's true, right? Seems pretty evenly distributed so far. There's no like clear trend of like reds only. Goddamn McDonald's, goddamn. Goddamn. Wow, what a pump on this thing. Holy shit. I think pumped 20 hours in the after hours today, holy shit. The futures dictate the moves for market open. Most definitely, they trade overnight, that's where you get gap ups. It's not because anyone's buying stocks, it's because of futures. I don't know if it's as simple as saying that. Like sure, like if there's a CME gap, like the actual SPX index might like follow the futures, but when it comes to like individual stocks, like they each have like their own catalysts and like order flow going on, right? Even more so when you get to like the lower caps. They don't really care what's happening with futures. Because like think about it, if that was true, then like everyone would just make free money, right? Because like imagine futures are down before the market open, then literally everyone would just short whatever every single stock on open, right?
3 a.m. Eastern, when the market opens, you draw out the first high and low of the first 15-minute candle.
Okay.
Now, from this, we know, right, this candle may have looked something like this, right? And then let's say maybe it went up and like this. Okay, so it may have looked something like that, right? And what is this time frame? This time frame is a 5-minute time frame. Okay, so from the 15-minute, this is how the candle developed on the 15. This is the 5-minute time frame. Now, on the 5-minute time frame, there's 3 steps to this, right? So first step is to draw out the 15-minute candle. The second step is to go over to the
fade the gap. There's lots of ways to play a gap, right? Lots of ways to play the gap. I think we have like a Discord post on it, if I recall. Can we copy this? There's like 5 different kind of gap plays.
5-minute time frame, and now what we're looking for is very simple. We're looking for either a break above the 15-minute or we're looking for a break below the 15-minute, right? And the best part about this is you don't need a daily bias. You don't need to come into the day with, you know, a thesis or anything like that. You can simply just trade the price action that the day presents for you, right? Now, why are we looking for the 5-minute candle closure? We're looking for the 5-minute candle closure because now this confirms that buyers are indeed overpowering sellers at this high. And what does this also confirm? Because for the 15-minute, right, we could also, some may say in the comments, right, why don't you just wait for the 15-minute candle to close back above, right? That's 30 minutes in, right? I got stuff to do in the day. I can't do that, you know what I'm saying? So for me, the 5-minute works because it is still enough precision and it shows me that buyers indeed are stepping in, okay? And so second step, wait for that 5-minute candle above or below the 15-minute. And then the third step over here, right, is now we're going to go over, let's draw this above like this, right? And now we're just gonna use the line here, right? So for the 5-minute, we broke above, right? This is all that action that I showed you here. And on the 1 minute, right, so this is the 1 minute, all we're looking for is, like we talked about at this point, the retest back into the key level, looking for continuation. That simple, okay?
This is a 15-minute orb. This is this is like a super common thing, right? 15-minute opening range breakout.
Bullish side, or
does it do anything different?
Again, you can look for that downside as well. But why is this a high confirmation entry model? That's the key. This is high confirmation because for the first 15 minutes, we let the market develop. We know in the first 15 minutes, right? And in the previous example, we said that we were done the day or we entered the trade within the first 10 minutes. That's a more bullish day, right? There may be other confluences there on that day, which we'll talk about when we get to the examples, right? But for this example, when you let and you come in with no bias, nothing, you literally just come in and you mark out that 15-minute opening range for the first candle rule, we know that for this to specifically work, we're getting rid of all that first initial volume because there may be too much volume, right? If you're a brand new beginning trader, right, you may not want to trade the first 15 minutes. It may be too volatile for you, right? And so when we kind of get rid of that 15 minutes and we rather use that as support and resistance and we wait for the 5-minute candle closure, all of that noise goes away. Right?
Yeah, I mean, I agree with this, right? Because typically, like on market open, it's like all the algorithms are just firing off their orders for the day, right? So like it is quite chaotic at that moment in time, which is fair enough. Fair enough.
All of that noise goes away, and now we can simply look for the retest on the 1 minute exactly how we were earlier. Bearish side, exact same, right? So if you were to, based off these two setups that I've shown you so far, right, which one would you say is a little bit more simple to understand for you, at least for both of those so far?
I'd say this one stands out as more simplistic, very specific, right? Especially in terms of timing wise and what you're looking for.
Exactly. So for this one, once again, we're also trading 9:30, right, to 11 a.m. That time frame doesn't change for us at all, right? And for this one, once again, this is going to be much more precise in choppier markets, right? So one thing that I didn't talk about yet is what markets do I trade? So let's do 3 here. There's 3 types of markets, okay? There's obviously the bullish market to the upside, right? There's the bearish market, and then there is this, okay? If you are a trader, one thing you have to understand, depending on what your strategy is, especially for this strategy, we don't want to trade this, right? There's not enough momentum in this range, right? You're going to catch smaller moves because you're not going to be able to catch continuation as well. And so for us, we want to catch days like this, trending, easy, simple days that we can make the majority of our money on. There's a lot of traders even that ask me, they're like, well, for example, if your strategy or your system works so well, you have a high win rate, whatever it may be, why can't you trade every single day? My win rate is high because I don't trade these days, right? It's high.
Yeah, this is a bit of zero alpha extracted from this so far. Basically just wasted 40 minutes of our life. Who knows, maybe it says something useful down the road, right? It's the reason why we watch it. Maybe there's one nugget of information here.
Because you don't have to come into the market every single day looking for a trade. You let the trade present itself, like I've shown you in these last 2 setups. These trades presented themselves to me. I didn't have to come in and be like, well, I'm looking for this. This could theoretically be like a fair value gap. Let me enter here. You know, it's very systematic on what I'm doing.
Classrooms for the youth.
I'm waiting for the entry, right? Very mechanical. The only, I would say for most of my setups that I'm going to talk about today, majority of them, I would say it's 90% mechanical, right? And then 10% discretionary, okay? And the discretion, once again, comes in when that entry is happening and how the actual market is moving and how the actual price action is developing. That you learn over time. So this 10% is extremely important. Don't get it wrong. It is very important, right? But you're going to learn this through experience. That's the only way you can learn this, right? Like there's nothing else that you can do except just keep consistently trading these systems and setups. The 90% you can learn honestly within 3 to 6 months, right? This part you can learn pretty quickly. This part is going to take you a little bit more time.
Definitely. Right? Yeah, and I think a lot of people don't respect that, don't respect that. They hear it and then they think, that's not me. I can be the one to speed that bit up, but they just have to allow the time. Just to clear one thing up though with this, does the candle have to print exactly like this, or is it literally just whatever the high and low of that? And when you say high and low, is it the close or the wick?
Good question. That's a good question. So for the 15-minute, the candle can look like whatever. It like literally, if the candle came
Market makers filling liquidity gaps. Are you talking about like the price, or are you talking about this video? Bring price where he wants. Make sweeps down or up, regardless of buy or sell. And that's how the market works, right? Like if you kind of look at these heat maps, it's like just go find one. Let's go find a better example. Maybe we'll just draw it. Like imagine this is like a heat map, and this is like a cluster of like liquidity, and this is like the price was like coming up here, whatever, and it went up, and it like went down a bit, and there's like another cluster of liquidity up here. Like these zones are the only places where like large entities can trade without getting wrecked by slippage. So like as the price is like drifting between one and another, that's quite illiquid. So it's like the market is like bound to move between these two zones, right? Like everyone is targeting liquidity. Like that's the whole point. It's not just market makers. Why do you think I have these fucking red boxes? I'm targeting it too. Everyone fucking is. And it's like self-fulfilling prophecy almost, right? Like this red box that was down here, right? Before this wick came and got this box, and this wick finished grabbing it, no one's gonna take a long here, right? No one's gonna take a long because they know this shit's about to get fucking got. So like it's like a self-fulfilling prophecy because like there's no one coming in on the buy side before this occurs. So obviously sellers are gonna dominate the price till it gets there. Not some like rocket science. God damn. Market maker will be selling the entire time. Market maker will buy and still push the price higher. Depends what they're trying to do, right? They all have different goals. Like there's multiple market makers, right? Not just one. But like that is their whole point, right? To provide and seek out liquidity so that people can engage. That's the whole point of the market. At the end of the day, right? The whole objective of the market is to pair buyers and sellers for whatever instrument you're looking at. It's gonna end up with too many options getting paid out. Definitely. Yeah, but you know that, right? You can see how they're hedged for the options that they've sold. It's not some big secret.
Right, it was a doji candle, I don't care. If it was a bearish candle, I don't care either. What I'm literally looking for is just the break above on the 5 minute, right, and then the retest on the 1 minute. That's all I'm looking for. So the candle itself can print however it wants. Now, in terms of should you do the wick or the body, this is where this comes in. Okay, this is where, that was a good question. This is where you need to understand where you should have it. Now, for the majority of new traders, like we talked about, technically, what is this, right? So let's say we do the actual wick here, right? If this is it, let's say we're moving to the downside, right? We're moving to the downside here, broke to the downside. Technically on the 15 minute, what did this create? Right? We moved to the downside. This is a green up close candle. What did this create on the 15, or let's say on the 5 minute? This was the one candle rule. The setup that we talked about last time, right? This is the one candle rule now. So technically, right, you can draw this out, but the actual entry would still be within this kind of small zone here. Yeah. That's one thing, and that's why this was a good question, is because you have to understand, you're not gonna get that precise entry, right? We're looking for those kind of small zones. So whenever I do draw out support and resistance, and I talk about this all the time, when I draw out support and resistance, that doesn't mean that I'm trading that exact level. It's the small zones around it that I'm trading. I'm just not gonna draw out the zone, right? Because there's no point of it, right? You just kind of have to understand that we're looking at that kind of small zone and looking at price action to gauge that entry.
No, I love what you mentioned there, though, in terms of that's where this question comes in, because I think a lot of people assume, okay, something has to always be the exact same all the time. But as we know, like 90% of your trades could be like that and probably will be like that. But the market is always so different and never identical. And even if you have a specific system and playbook, like we've gone over now too, where they are specific, they have specific times, specific rules of how to, observe and then execute upon. But equally though, the market is the market. It always looks different, and it never feels the same, depending on the day and the volatility or the catalyst within that market, or maybe even news on that particular day, can make things slightly adjust, you know. And being able to use that discretion, and again, back to your point, which is so important, is giving yourself the time to build that, right? Because it comes from your repetitions, right? You have to be able to observe the market time over time over time to be able to develop. And again, the funny thing is, it's going to be different to the person, right? The same, let's say you have someone who started at the exact same time as you, has traded the exact same markets, time frames, everything. They're going to have their own sort of edge that they've noticed because of the reps that could be completely different to yours. And neither's right or wrong. It's actually right for each person simply because that is their perception and what they've been able to see within the market.
So it's funny that you say that, because I trade break and retest, and someone in the room also trades break and retest with me, right? We both learned, you know, very similar. I kind of taught him a little bit as well, right? But for example, he caught a Tesla trade today, right? An NVIDIA trade today, right? That was the break and retest using the same setup that I'm teaching today, right? But I caught an NVIDIA trade, which was a different trade today, using another setup, right? That we're going to talk about today as well. Right? So similar to how you said, we trade the exact same thing. We trade the exact same thing. So why didn't I take that NVIDIA trade with him? Or why didn't he take that Tesla trade with me? Right? It's because this right here. Okay? It's because, yes, it's mechanical, but every single trader will see different things. When you trade this, for example, the first candle rule, you may trade this on ES, NQ, right? You may trade this on Tesla, Apple. I trade options and futures myself personally, right? But whatever you trade this on, this will work. It just depends on how you specifically trade, and most importantly, right, how much experience and how much backtesting you've done to really understand how to pinpoint these entries. Because yes, it's simple, super simple, but you need to understand that the data will show you how to enter without hesitation. That's the key.
Definitely. No, I love that. And I think it's so important because, again, the 90% is what we're going over right now. The 90% is what most people at home need to be implementing into their trading, whether it's this or some other concept. Regardless, that work on the 90% needs to be done. And I think what happens is most people, when they're meant to be in this phase and focusing on this phase, they're too focused on trying to do this. And by doing so, they end up taking instead of doing, let's say, 3 or 4 steps forward and 1 step back, as the usual sort of the right journey is, instead it's the classic 1 step forward and 2 back or 3 back, because they're so focused on trying to use their discretion when they haven't actually built the reps. And I think discretion, a lot of the time, people try and sort of relate to intuition, which then a lot of people relate to just how they feel. You know, so if they're on the 1 minute chart and they think, I think this could be a buy, and then they just do it, versus, again, 90% of the work's done. You know, you built your reps, you've really understood the playbook, and then over time you got into a point where you go, actually, I think I should execute in this manner, or I should be marking my high or low in this manner. It's based off, like you said, backtest, time, effort, reps in the market, when you've already done this. And again, back to, I think a lot of people unfortunately make the mistake of trying to do this, focus too much on this. And I think a large part of that actually, you know, is the fact that a lot of people who are trying to do this bit is because they've already traded for 2-3 years and not seen results, but they assume that that's reps.
Right.
And I think that's a good thing to highlight, is that reps isn't just how long you've been trading or, you know, been interested in the markets. Reps is how long you've worked with an actual specific playbook that has rules, that has a system, and you've actually spent time on that specific system, not just as a trader as a whole.
That's a perfect point. I think I say this all the time. Your trading doesn't begin until you have one proven system. Before that, you're gambling, right? When you're jumping from strategy to strategy, you're simply gambling. There's nothing that you're actually doing that is working, right? Because you may trade the first candle rule one day, then you're going to trade the 1 candle rule, then you're going to trade the next setup that I'm going to teach you, then the next one, then the next one. Like, you're just trading so much, right? That it doesn't, you don't even know what you're doing, right? You're just looking to make money on something, right? And that's not key. It's about back testing. Everything that I say today, you can go and back test it, right? Like, it's pretty simple. I'm laying it all out. Go back test these, see if it works, right? Once you see it works, then start forward testing it, right? That's how you're actually going to see that consistency over time. It's not just going, like you said, it's not just because you traded for 2 years, you're magically going to one day wake up and be profitable, right? It's putting in those smart work to become profitable. Hard work doesn't always mean that you're going to, you know, make it. Like, it's all about smart work and hard work both combined, and then you see the actual proven results. One thing I did want to mention,
no, I'm curious about his taking profit though, because, like, for instance, but okay, let's say he has like the level, and the thing comes and does whatever, right? It sets up his entry model, and he gets the candle like this. Like, the wick can be like this, or it could be like a really small wick, right? So, like, having the stop loss here versus the stop loss here is a quite different in terms of like the RR on the trade. So I'm curious, like, if he gets like a really, really tight invalidation, does he still do like the shape of the 2R? Or does he just juice it to like whatever he was targeting originally? Or like shave but like at a 3, 4, whatever kind of thing, right? Like, shave it dynamically based on how tight your invalidation is. Curious if he talks about that or not. And it doesn't matter, right? If we were to do this, we could just do the same thing ourselves on our own, in our own way, but curious if he's given that any thought. In terms of this stuff, god damn. We were born into systemic fail. Bitcoin will revitalize the world. Bitcoin's not looking too hot right now, I'll tell you that much. This thing is not looking too hot. Today will be a pretty interesting candle, right? Is this marking the higher low or no? Or no? Or no? Or no?
Here, sizing, right? A lot of people talk about sizing. For the first kit, all of these setups, I size the same. So for me, it's a little bit different because obviously I've been trading for a little while now. So I may come in with 50 to 100 contracts, okay? That's a decent amount. For example, if you're trading Tesla, one contract, for example, maybe $10, right? So like 100 contracts, that's a pretty big position size for scalping intraday, right? For most people that are brand new, I genuinely recommend if you're a brand new trader or you've been trading for a little while but you haven't really seen that consistency, I typically recommend 2 to 3 contracts, right? The reason I recommend 2 to 3 contracts, especially if you're trading options, is due to the fact that if you're trading 2 to 3 contracts, you can learn the scaling out of the trades as well. Because we talked about, for example, this trade, if we come back up to high of day, this may give us a 1.5, right? This may not be the 2R that we're looking for. So you scale one here, right? And then you let the other one ride to the upside. That other one may make you more than this 1.5. It may make you 5R, 6R, whatever it may be. Or it may come back down, right?
Oh, he
you
always shaves at the high? Oh, interesting. Okay, interesting. 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 Curious why you chose to do it that way, like if you collected any data on this or not. Seems a bit premature to take out hyper aggressively if it's right there.
It's about learning that, because if you can learn that with 2 contracts, you're going to learn the exact same lesson with those 2 that you are with the 50 and 100, right?
Less pain.
Exactly, right? One of the things that I always talk about is the university example. If me and you went to the same university, right, with the same course, same program, we even went to the same parties together, right? We did everything, we got the exact same experience, but you paid $10,000 to go to university for your tuition and I paid $50,000. I would be pissed, I would be pissed, right? And the reason that is because we did the exact same experience. So for most people watching this, it doesn't matter if you have a really high income, job or whatever it may be, right? This is what you want to do, because you still are going to learn the same lessons with those 2 or 3 cons that you're going to learn with 50 and 100. So I just wanted to make that very clear, just as risk management, especially if you're learning to trade. But that is the first candle rule in a nutshell.
Love that. Yeah, no, that's a great analogy, by the way. It is.
So the final setup that I'm going to be talking about.
Very true, right? Very true. Because the other thing about trading was when you first start, most people start winning a couple of trades and they think they know what they're doing, right? Like, this is a common pitfall with beginner traders. It's like they start trading, like lose a bit of money, and they win a few trades and think that they got it figured out, and they size up and just fucking wreck themselves.
Going to be the pre-market setup. Now, what's the pre-market setup? For me, people, once again, for all these setups, you can trade on crypto, options, futures, Forex, stocks, whatever you want to do it on. Like I said, I trade futures and options myself. Now, when we're looking at this, for pre-market, this is going to be 4 a.m. to 9:29, right? 9:29 a.m. And that's going to be Eastern timing. Okay, so all the data that you have in between these levels, right? Let's just say we have this data in between these levels, right? So we have a clear high and we have a clear low in between these levels. Now, we know what's the time frame that I trade, right? I'm trading from 9:30 to 11 a.m. And then what's that final kind of time frame right over here, right? This is going to be 11 a.m. to 4 p.m., okay? This is all in Eastern timing once again. So when we look at this, this data is now the exact same, right? So what was happening in pre-market? Pre-market, of course, there's not too much retail that's trading pre-market session, right? If you're trading pre-market session, I don't know what you're doing. But when you're trading pre-market, right, what are you looking for? You're looking for these highs, right? Same kind of scenario, right? Highs, and you're looking for the lows here. Okay. Now, if we know 9:30 a.m., the stock.
I can't take you serious, man. You're definitely the biggest troll that's been in this chat by far. By far. It's funny though. It's funny. It makes me laugh. The other day I was laughing so hard when you were talking about the other guy. Would you say got the jam to put in 100K or something like that? I was laughing.
Is breaking out of the pre-market session. What does that mean? It means instantly buy your
Hold on, I
step is
missed
right
that.
highs, and you're looking for the lows here. Okay. Now, if we know 9:30 a.m. the stock is breaking out of the pre-market session, what does that mean? It means instantly buyer stepped in, right? Now, this is going to be more of an aggressive setup, you could say, right? Because you can trade this like the first 1 or 2 minutes right into open, right? But when we see this, what are we looking for? We're looking for that instant pullback into that key level, okay? We're looking for that instant pullback into that key level, looking for continuation to the upside. That's it, right? For this one's very, very simple, but this one, if you are a more aggressive trader, this is going to suit your personality, right? Sometimes, and I'm going to preface this in a second here, but for this one, sometimes what happens is if the higher time frame, and we'll talk about this in the examples, right? Let's say we have the 4-hour time frame here, okay? We have the 4-hour time frame here, and on the 4-hour time frame, what we're seeing is a break above, right? So this is the 4-hour kind of uptrend here, and then we're seeing this kind of consolidation pattern like this. What does this mean for us? Well, for us, this means, some people may call this a bull flag, right? You can call it whatever you want, right? You have the resistance, you have the support. Now, we know there's 3 ways a stock moves: an uptrend, a downtrend, or sideways action. So sideways action, like I said, I don't want to trade it, but it's not bad because you need to understand context behind sideways action. So for me, when I'm looking at this sideways action, I know that buyers have stepped up so aggressively here, okay? Now, what's going to happen? Sellers, because we're coming near that resistance, want to bring the stock down. However, buyers don't want the stock to come down, so we're consolidating. Why? Because this is where that fair price is, right? Fair price is over here, and also we want to keep this stock above this previous, may there be support here, whatever it may be, right? And so when we see this and the stock may be breaking out or gapping up, right? Gap and go, we'll talk about that in a second, right? If the stock is gapping up, what are going to be the highest probability levels right into open, right? We know the first candle rule is there.
Long Monero. Pretty aggressive long right before these levels get tagged. Quite the aggressive long right there.
We know the one.
Is this? I think I'm wondering. Is he talking about this flag in the context of like the overnight session, the flag formed, or like you didn't really kind of explain that? Because if this is happening overnight, I wouldn't give it like that much weighting, but.
Candle rule is there, but those are intraday setups. We can't come into the open and be like, okay, we're going to, get into this right away, right? We got to wait for either the 5.
Perfect cup and handle. You guys are all pattern traders, huh? Interesting. You should probably read about cup and handles, right? If we're gonna trade a cup and handle pattern, the cup duration 7 to 65 weeks minimum for the stats to apply. Not a bunch of 5-minute candles.
5-minute close, 15-minute close, and the 1 candle rule, we have to wait for the candle to develop. This one, right away.
The algos are pattern traders. I don't know about that.
We can get in, right? Because we can get in the second it breaks above the pre-market high. All we're looking for is the retest. This may, honestly, the first candle may be this 1 minute right here, right? We may have maybe one more candle for a little bit more displacement, and then this right here, we're just looking for that retest. That's it, right? That's simple. And then we're looking for that upside movement, or we're looking for that downside movement. That's it, right? So that's the pre-market setup. And then of course, this is going to be on the 1 minute time frame as well. Now, there's a couple things that I just want to clear up before we do anything else. The biggest question I get on YouTube for all my
basically just sweeping the overnight highs and lows
videos is, what option contracts do you trade? I get that all the time. If you trade options, if you trade futures, right, usually you can just trade the same week. But for options, what I'm looking for, right, is going to be the 1 OTM or the first one ATM. Now, what does it stand for, right? This is out of the money contracts. This is at the money contracts. For me, I am typically buying the first at the money contract or the first one out of the money, okay? I'm not buying in the money. Why is that? Because if we're looking at this break and retest, You can see it's retesting over here. What is going to make me more money? Right? It's not in the money. In the money is a super, super safe thing to play, but it's not going to make me the most money. What's going to make me the most money is going to be the out of the money contract looking for continuation. So I'm going to enter in on that one out of the money contract, because if my target's, for example, on this stock, right, let's say it's 100 here, my target's 101, okay? This is the at the money contract. The at the money is 100, okay? If I'm targeting 101 for my first profit target, why would I not take one out of the money? Because the second that one out of the money comes into the money, I make more money. You get what I'm saying? So for anyone that's always asking, right, I'm trading one out of the money or one out the money, and I'm always trading, right, weekly contracts, right? Other than if I'm taking a swing, which we'll talk about in the examples, I'm taking the weekly contract. So that week, right, let's say it's Monday, I'm trading Friday's contracts, right? Then let's say it's Friday, I'm still probably trading Friday's contracts. If the volatility is too much and I don't like it, right, then I may trade the next Friday's contracts. But I just wanted to make that very clear. But this is the pre-market setup.
Let's take a break for a minute, guys, because I want to tell you about our incredible sponsor, TradeZella. TradeZella is the #1 trading tool in the entire trading industry. TradeZella allows you, or in something matter, if TradeZella, making journaling and chart fanatics specifically, we are actually getting the playbooks from the episodes that we're filming with these incredible verified traders and adding them as playbooks onto TradeZella, so you can actually go on there and see the rule sets already predefined. So make sure you check that out as well. Now, you can actually get 10% off your monthly subscription using CF10 on TradeZella.
Hopefully this thing starts going and help you out. I mean, so far we are trying to break out the VWAP.
20% off your yearly subscription with TradeZella. The links for TradeZella are in the description below, so make sure you go check them out. Use CF20, get 20% off your yearly subscription, become a better trader today. Now let's get back to the episode.
Cool. All right. I guess we're done with the setups.
Yeah, we can do the pros and cons.
Yep.
Again, when it comes to pros and cons, I say this on every single episode. Cons doesn't necessarily mean it's bad. It's more so just something to be aware of. As you probably know, and no doubt will be the same today, is 99% of our episodes, patience is always on the con side, which obviously isn't a bad thing. It's more something that you just have to be aware of when looking to execute and implement the playbooks that we've covered.
So for pros, right, there's a couple things here. One thing that I really like about this setup is that if you are a full-time student, if you have a full-time job, if you just can't sit at the market all day, right? You're done the day quick, right? So quick days, okay? Quick days. Even when we talk about the swing setup that I'm going to talk about today, that could technically still be a quick day because you don't have to, keep analyzing every 1 minute candle. Like you can be done the day pretty quickly.
No, honestly, every strategy is pretty quick, right? Like I don't know too many people that I'm trying to sit here all day scalping nonstop, which who the fuck does that? Most people just have some level in mind and are just waiting for the price to react at that level, right? And then once it leaves that level, there's nothing more to do until it gets to the next level of interest.
Manage risk. We'll talk about that in a second. Right, so quick days is #1 for me at least. That is key. #2, repeatable. Right, so repeatable, hopefully.
It looks right there.
That looks about right. Repeatable, right? So this is a repeatable and consistent strategy. Every single time that I trade this, I know for a fact that I'm going to trade the same thing every day. I'm not changing my entry criteria. My entry criteria always remains the same.
You don't have to spend all
Number
day.
3, for me at least, right? Though it's quick, though it's repeatable.
Yeah, I agree. I don't think okay, maybe when you first start trading, and you're paper trading, and you're trying to just learn the ins and outs of whatever you're playing with. Yeah, you can see you're just fucking trading nonstop, right? But once you're actually trading a strategy, there's no need to sit here all day, right?
The best thing about it is
you're wasting time, if anything, and you're not being productive. You're not getting anything out just staring at these candles over and over and over and over on the 1 minute chart.
Simple, right? So no matter what level of trading you are, right? And I know some traders that are advanced that may trade order flow and they're bro, that it's too easy, it's too simple, right? It works, right? At the end of the day, it works, and that's what you want. You want something that works. You don't have to be the most advanced. At the end of the day, when you're trading, what do you want to do? You want to make money, and if you want to make money, this is a very simple strategy that you can follow on a consistent basis to do that. Okay, so those are some pros
you take, the more chance you'll hit a better rates. I think it depends more on the strategy than anything. But yeah, ideally you are being pretty selective with just high quality setups.
I believe are good. In terms of cons, there's none. So let's get to the, no, I'm just kidding. No, so in terms of cons, right, there's a couple, right? So #1 is, though it is extremely simple, though it is repeatable, and though you'll have quick days, because you're having quick days, you can't hesitate, okay? So hesitate.
You need S. No, it's not. I didn't go to school. But I rely on spell check on my books.
I was like, but hesitate, right? So if you hesitate on an entry, for example, like if we're looking at the break and retest, you hesitate on an entry where your entry should have been here, right? Because we're trading momentum, we're trading before 11 o'clock. By the time you enter, you may enter high of day just because of how quick the stock moves, right? So hesitation is not key in this. Now, as a new trader, you may hesitate. I hesitated a lot, especially as a new trader. If you go through drawdown periods, you will hesitate. Why? Because you kind of almost have PTSD from your previous losses, right? Similar to a soldier, like you have PTSD because, and you may not think this, but because you've had so many losses previously, you're scared to enter into these next trades because if it loses, you may blow your account or whatever it may be. And the reason you think like that is because you don't have a consistent system.
Who's gonna blow their account taking a 1 minute fucking scalp? Or I've blown their account, period.
All you're doing is gambling. So hesitation, you need to get rid of that.
Also,
right?
like, should have no PTSD, right? Either the strategy has edge or it doesn't. Simple as that.
The second con that I would say that this one does have is that when you're looking at trades, like you have to not only be quick like we talked about, but it needs to have the same repeatable setups, right? So for each pro, there's a con, right? So because it's repeatable, right, this is a con technically, right? But every single day you're going to come in and you're going to do the same thing. What does that mean? Boring. Right? Extremely boring. And that's what trading should be. It should be consistent and it should be boring, right? I literally had a YouTube video titled My Boring Strategy, right? You know what I'm saying? Why? Because this is an extremely boring strategy. You're doing the same thing. It shouldn't be fun. You may make money and you may feel good about it, but it shouldn't be a fun thing for you because it's so repeatable. Every day you wake up, you do the same thing, you let the market develop, and then you let the actual price action take it from there, right? When you take your entry, this doesn't mean, if you lose this, and it's an A+ setup, that doesn't mean that you may have necessarily done anything wrong. It's just the price action playing out and the probabilities playing out, right? So boring, I would say. And then number 3, right, for some traders, right, because it's simple, they want a little bit more advanced. So I wouldn't say it's an advanced. I would say there's definitely confluences that you need to learn. Though how simple it is, it's still going to take you, months to years to actually become profitable doing this and consistent doing this, right? So I would say that it's not an advanced strategy, but because it is extremely simple, right, it's easy to fall off. Right? What do I mean by that? Right? Because it's so simple, right? And trust me, I've seen this happen multiple times where the strategy works so well, like especially for the last couple months right now at the date of this recording, right? The setups that I've been telling you about, right? 80 to 85% win rate for myself, live trading every single day in front of thousands of people, literally, right? And everyone's doing really well, except this last week, right? This last week, it's slowly coming down. Why is that win rate coming down? Because the market's being a little bit more choppy. Now, when that's coming down, what's happening? Because the market's coming down, it's easy to fall off of using that one strategy because once again, we know it's boring. We know if you hesitate on the entry, you may miss them. And now you put in a choppy market on top of that, super news driven, whatever it may be, right? You're jumping from strategy to strategy, right? So I would say that would be a con, right? Just trying to stick to one. And I wouldn't even say that's a con of the strategy, to be honest. I've just seen it happen. So that's why I wanted to put it here. Like as a trader, if you're trading one strategy, right, you want to stick to that one. And that's why I'm going to write that one over here.
If anything, if I was him and doing this, I would like layer them, right? Do like the 15-minute orb. And then you can also take like the 30-minute orb or like the 45-minute orb or the 1-hour orb, right? If you are like itching to have more potential setups that day.
It's a really good point. And one thing I will say in terms of, you did mention, let's say if you're doing,
because they're all the same at the end of the day.
And sort of the more intraday side, the quick days though are pro. If you do have a job during that window, it might be hard to execute. But equally, as you mentioned already, you can just step up timeframes to then eliminate that as a con or something to worry about. But yeah, love that. Now we're going to go over actual trade examples, right?
Yep.
Of the playbooks that you've gone over, one of which being that 100K trade.
Yep.
Now we're going to go through some actual trade examples that emulate the same trade playbooks that Raf went over here on the whiteboard, but on the actual charts. And these are setups that he's actually taken as well. So let's get straight into it.
Cool. So on the first example here, we're on Tesla. Every example today is going to be on Tesla just because honestly, if I was to go back and look at how much money I made throughout my career, I would test 70 to 80% is on Tesla, to be honest.
Incredible.
So it's just one of the stocks.
The thing I wonder about some of these people is like, there are certain people that began trading in like the middle of a bull market, and they just did some like simplistic strategy like this, and it worked, right? It worked. But like if this edge were to erode, I'm very curious how people like this would survive, right? Like, can they adapt? Or no?
The first one we're going to use is the first candle rule, right? So when we talk about the first candle rule, right, you can see here we're on the 15-minute time frame, and what we have to do is just wait for the first 15-minute candle to develop, right? So let's open this up. Boom. Now, remember you talked about how can the candle form? What should you be looking for? This is the candle, right? Now, this candle I wouldn't say is bearish. I wouldn't say it's the most bullish either, right? More of a hammer stick type of candle. So what we're going to do is mark out the high up here, okay? And then we're going to mark out the low. Okay, just like that. Now, what we're looking for here is simply going to be the break above, the retest, and continuation, right? To either side, either the upside or to the downside. But we're not looking at it on the 15-minute. We're just marking out the 15-minute. Now we hop on over up here to the 5-minute time frame. Now you can see on the 5-minute, we see a little bit more data, right?
People just swap into bonds and save shit during bear cycles and wait to rebuy the bottom. Well, like, yeah, with your portfolio, yeah, it can give like have a more defensive rotation. Like the thing about traders, the very common thing about traders, like the question you should be really asking is how long have they successfully traded? Because there are a lot of people, like, I was watching one of these yesterday, and the guy was talking about how he used to trade 9 EMA retests. That was literally a strategy. Just bounce up the 9 EMA, and that was it. And he did this like after the COVID, like he started doing this like after the COVID drop, and he did it all the way up. And then he kept trying to do the same strategy once the market stopped just pumping after that rip, and he just gave all the money back. And eventually he came up with like a new strategy. But that happens to a lot of people, right? It's like a very common. That's why people always say to ask how long people have been trading successfully.
Right, so you can see we opened up here, moved to the upside, seller stepped in, right? So let me make this clear. Seller stepped in here. Then you can see how aggressive those sellers were to the downside, creating that 15-minute low. And then buyer stepped in again, and now we're in that range of the 15-minute.
Yeah.
Now, in this 15-minute range, we do not want to trade anything, right? That's just not key for us. We don't want to trade anything there. So what we want to do now is wait for the break and the retest. Most specifically right now, we want to wait for step 2, right? So step 1 is obviously waiting for the 15-minute to develop. Now that it's developed, we will go over to the 5-minute, which we are right now. And we're simply going to play out the actual price action. Now, in this example here, what do we see? We broke above, right? So this is where people get confused. You broke above, right, on the 5, but it didn't close. Notice how I always talk about candle closures. This one did not close above, showing what? Though it's a green candle, we opened up here, buyers aggressively brought it up, but sellers were still able to close the 5-minute below. And this is why this is such a precise entry. This is why you can get really, really, a high win rate with this strategy, because you're waiting for that confirmation as well. Okay, so let's keep playing out this trade.
So in this case, though, even though it went above, it's not invalidated the setup. It doesn't need to. You don't need to change the high or low. You just need to wait for a close above or below.
Exactly. Just wait. Just wait for this. Let's keep playing this out. So right here, we now get that break.
When the volatility first starts popping up is when I start paying attention. Cheap options before shit starts moving a lot. Are you talking more like in a bear market? Or like what this guy's doing?
Break above. Okay, so key, we get the break above. This is the 5-minute break now. Yes, it didn't break this previous high, doesn't matter, right? Because now we understand that buyers brought this above. Sellers try to step in, buyers are still aggressive, right? So now we move over to the 1-minute time frame. Now, on the 1-minute time frame, what are we looking for? Now we're looking for the break and retest. If you want to get a little bit even more advanced with this one, right? And once again, this is just adding confluences. You're really just looking for the retest into this level, right? Because this is the down close candle, right? Highest previous down close.
February, March, April. Now I'm back. Yeah, April's a good time to get in on things. It's a fire sale, right? It's a Call of Duty. It's like Warzone. I'm at the fucking buy station just spamming X on stocks. Just buying whatever the fuck I can.
Close candle, right? Other than obviously this one, this is the highest previous down close candle in this scenario, right? And then you would want to retest back into this previous support turn, or say resistance turn support. Okay, so play this out. Right there, right? What do we get? We break above. We come back for the retest. Strong lower wicks, right? Strong lower wicks. Now this one, buyers and sellers, I would say are both neutral, but this one already showed that buyers are strong.
Yep.
So for me, what am I looking for? I'm looking for an entry here. This is because we know that the stock is overall strong. We know that it tried.
Volatility, like the options more valuable, and direction isn't right. There's a lot of cushion. Yeah, especially if you're like doing what you said you get before.
To break above, wasn't able to. Now this time we broke above, and now we are retesting not only right the 15-minute open, but we're also retesting that 1 candle rule. So a lot of confirmation there. Price action is confirming as well. We enter into that buy position right here. Okay. Now, when we're entering into a buy position on a stock or on a trade like this, right, what are we looking for? Like I said, we need to have at least that 2R multiple, right? So if we're looking for that long position here, where would you put your stop loss? Just curious, where would you?
Me personally, I would probably look to put it below this low. See this large green candle, the one that closed above the resistance.
100%, right?
Yeah.
So right here, because this is where the structure break will occur, right? Because not even the structure break necessarily because we're on the 1 minute, but this is where the loss of momentum will occur. This is something that I talk about a lot within my channel, like just the loss of momentum.
Okay, so he doesn't target the high today doing this then? Because that would not give 2R,
break
right?
structure, right? So like, for example, technically on the 5 minute break of structure may occur over here, right? Or change of character, you know, that I
Depending on how you use it.
you know, whatever you, but for me, I call it break of structure. So it would occur right over here technically, right? But loss of momentum, this is the previous, you know, higher low, right? So that's where I would put it. And then we need at least a 2R multiple. Now in this example, you can see high of day only gives us like less than like a 1R. So for me, that's just not, you know, okay. I might still take some off at high of day, right? Just to lock in some profits. That may be a lower percentage for me, right? But what I'm looking for is that 2R, right? Now in this example, I would target 360s. Now you're gonna ask, why would I target 360s? 2 reasons. Number one, that's where the 2R multiple comes the most close to. But number two, and the most important part with the 360, it's a whole psychological number. Now, when a stock is moving in, you know, some traders overcomplicate this. When you first started trading or investing, right? And you bought Apple shares or Tesla shares, you didn't buy them because you wanted to, you know, or say you didn't buy them at a specific like price. Like you didn't buy them at 358.25, right? You bought them at 355, 356, whole numbers, right? That's what institutions are doing too, you know, and they may buy through obviously these key levels, right? But those whole psychological numbers, there's usually a lot of volume sitting at those levels. And so that's what I'm willing to target here. Okay. So take profit up here, right? Stop loss down here. Right, so you can see in this example, we're risking $1,000 essentially for $2,350. That's simple, right? We're already into that buy position. Now all we got to do is play it out. You can see already buyers aggressively stepping in there and boom, just done like that, right? So you can see this day, where do we exit off? We stopped. If you were to close that whole trade at that 360, right, you were done at 10:16, market opens at 9:30, you were done in less than an hour, you can go enjoy the rest of your day. That simple, right? Now, this trade, once again, though this is hindsight technically on replay, right? You can see right here the exact times that I actually did enter. Once again, this is done live every day, right? So you can see 367.50 calls. The price right here was about 357s, right? So I was going like one out of the money on this one, right? Sorry, 357, right? So I was going one out of the money on this one or one at the money at this time, right? 357 calls looking for continuation. You can see I saw that 10:08 a.m., right? Same stock that we just saw breakout retest, right? And then that continuation to the upside. And this one, right? You can see Tesla high of day, 360s coming in. And then you can see this one actually resulted in about $11,350 on this Tesla trade, 357.50 calls, right? And then I had a 10 trailer position, right? So though I was out, right, majority of my position at 360, I had 10 trailers left for the rest of the day, right? And if we actually end up playing this trade out, right, you can see the rest of the day.
Risk 1,000 for 2,000. That's like somewhat normal, right? Most people like do that, like 2 to 1, 3 to 1. He's momentum, not counter trading. I mean that's the whole point of his strategy, right? To take the retest and break out of this 15-minute range.
Actually ended up coming.
I'm sure if we really wanted to, you could also come up with like an inverse model, right? Like for instance, like a shorting, like a loss of the breakout.
Back to the upside here, right? And I think I stopped out of this trade total, right?
Like trade we stopped.
It was like right here, right? So I was able to capture essentially, right, another 0.53 or 1.93 on the actual stock just by holding those, right? And the stop loss, like you said, right, just trailers, and you're basically just looking for that break again of structure on the 1 minute or the 5 minute. But that was basically this full trade. This is the first candle rule, super simple to follow. You're basically just looking for strong price action, and then you can have other confirmations in it as well.
Definitely, but from execution, in terms of executing the trade to essentially your initial target, you're talking over $11,000 in the space of roughly 10 minutes, around there. But as you said, though, rightly so, from where your thesis began, about 45 minutes, which is still incredible.
Right.
But again, to go back to your original point earlier, beginners out there, you start lower, right? That's the result of years of building those reps, building that discretion eventually as well through those reps. But regardless, though, the reason I highlight that is to show you simple trading and the results it can bring when you put in the work.
100%. 100%. So this was.
I'm curious because he didn't really say, like, is he manually doing a stop or did he set like a trailing stop? Something of that nature. Because if he got stopped out here, like, it wasn't just like manual, right? It would have been like boom, 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 stopped.
For this one, I would say this trade, because I technically entered in around that 10:09, 10:08 candle around here, right? And so technically this trade for the full trade took about an hour, right? But I was actually off. I was actually off the desk, to be honest. I was off the desk at like 10:20, right? So for me,
the stop loss will break away before that. It's just an emergency stop. Well, I mean, I guess some of you guys don't use stops, but like, I mean, yeah, I think most people. Look, have we seen a single one of these videos where someone's not using a stop loss? Other than the options guy who sides his options contracts like as if they were the stop loss. Like instead of him putting a stop loss on the trade, he buys like $1,000 premium worth of options.
Technically, it took 10 minutes, like you said. It took 10 minutes, $10,000, $11,000, and I called it a day, right? So technically, it was $1,000 a minute, right? But you don't look at trading that way. It's based off. One thing I heard was, and I always tell everyone this that trading, you're making money based off of decisions. You're not trading your time for money, right? So the reason I say $1,000 a minute is kind of a joke because it's like such a high amount to be doing, right? But that came after 7 years, right? So if you average it out, you know what I'm saying? So, but this is important to kind of mention as well, right? That this was a 1 hour trade, but technically the majority of the money was made within 10 minutes.
Exactly, yeah. Now, to your point, it's a great soundbite, but the reality is, as you say, once you get to that level, it's not even about the time, and it's a process thing, right? The process is paying you that much, and it is still remarkable because at the end of the day, the reason we get into trading, or majority of people, if not everyone gets into trading, to be able to make money like that. Because if you so decided that I'm done for the month, that is more than the average salary, for example, and that is enough to live off. But then it really comes back to the fact that the real traders and the ones who want to reach the high levels, that's not their mindset anyway. They're not even looking at the money. They're very focused on their performance. As
focus
a trader,
on the
how
game.
well their decision making was, as you said.
100%. Nowadays, like to be honest, my main focus is just like trying to get precise, like really, really good entries. Like I talked about earlier, you don't need precise entries in the beginning. Just enter based off of what you're looking at. But like now I think after years and years of trading, like my main goal is like we've already done the money run, we've already done everything else. Like now I really just want to get those really precise entries to really lock in those those bigger profits and even those exits, right? So this was the first trade for the first candle rule, right? Now what we'll do is we'll go to the pre-market session or the pre-market strategy, and then we'll finish off with a $100,000 Tesla trade, which was the 1 candle rule. So here we are on the second example. On this example, we're going to be looking at the pre-market session. Now you can see the pre-market session, like I talked about, right? Opens up at 4 a.m. Eastern, and it's done at about 9:29 a.m. Eastern. What we're going to do is draw out, once again,
can we put the view up and start going here?
So
or not?
the resistance here, right, is the resistance here, okay, is going to be this green line, okay, and that's going to be the pre-market high. For our support, it is going to be the pre-market low. Now, right into open, we don't have to change time frames for this one. This one, we're on the 1 minute, we can stay on the 1 minute. If you want to trade the 5 minute, you can do that as well. For us, we're going to use the 1 minute because that's what I personally use myself, okay? Now, when we're looking at this, what do we want? Once again, very simple, break above, retest, continuation. Now, for this one, it's important to mention, for this, you are specifically looking for strong price action right off the bat, okay? So what we're looking for is basically the candlestick to develop and show us within like the first 5 minutes that the market does want to move and push up, right? The reason this is because you can see this market is gapping up. Okay, so I said that we were going to talk about that in a second here. This is the example, right? So this market gapped up the day or on the Friday previously, right? This is the Tuesday, so this was a long weekend, right? And when we gapped up over that Friday, this is the level that's going to be the most high probability. Now, another setup that some people trade is going to be the previous day high, previous day low, right? And the previous day high would be around like this 343 level. Great setup to trade as well, right? But for these days that you do gap up, what are going to be the levels that every single trader is looking at? It's going to be the pre-market high and pre-market low.
Stingy with entry and size. I'm not sure. What do you mean by that? Like, or why do you say that? In regards to what?
Right, because that's the levels that you have before the market even opens. Okay, so now what we're going to do is we're going to open up the trade once again, and we're going to see exactly what happens here. Boom, right off the bat, what do you see? Buyers aggressively step in, right? Just like I mentioned.
Stingy as in very picky. I guess. I mean, I don't... Like, your entry is either there with your setup or it is not, right? And then sizing up to you. Like, some people just size the same thing every single trade. Some people do dynamic sizing. I think most like experienced traders do dynamic sizing. But yeah, I probably wouldn't recommend it if people are just starting. Because like you don't have like enough experience to really know like Like, is this a situation that warrants me sizing up or not?
Need to show you that they're stepping in aggressively, and that's how you trade the pre-market retest. That's going to be the highest probability way to trade the pre-market retest as well. Okay, so now what we're looking for, like we know, is the retest back into the level. Now, you know, a lot of traders, they'll see this and they'll look at, you know, for example, this first like 931 candle, try to get in on that. Good candle, right? If the higher time frame is very, very bullish, you could even potentially look to get in on that candle, looking for that quick move up, right? But what I like is displacement, right? Now, what's displacement? Displacement is the move after resistance. So this is resistance. Displacement would occur on this move, right? Let me actually do this, right? This to this is displacement. Okay, so when this is displacement, we need to make sure buyers are stepping up aggressively, breaking above, right? This once again shows us that interaction between buyers and sellers, and then we're looking for the retest back into the level. If you don't get displacement and you get an instant retest like this candle right here, it's a decent retest, right? If the higher time frame is aggressive enough for you to take that, but if it's not, then you need to wait for displacement, especially in this example right here, even though we saw very, very strong price action right off the bat.
Would you say a lot of the time, if you don't wait for that displacement and you take the first one, as mentioned here, the risk to reward,
really options
unless you're,
morning,
you know, again, going back to our previous example,
20 seconds. True.
Kind of targeting the 1 to 2, the risk reward to high of day at that point would always be really, really low.
100%. So there are some trades that I may take like that, right? That are like very, very quickly, but the risk reward only stays high. And like I said, if the higher time frame's there. So if you're looking at higher time frame liquidity levels, right, which we'll talk about in the next example, actually, that's going to be the swing trade.
Yeah.
Right. So we'll talk about that in a second. But when you're looking at higher time frame liquidity levels and you're looking at that specifically, that's when you're going to get those, you know, those bigger trades. But without that, right, then displacement is what you need. Okay. Yep. So in this example, you can see the breakout. You can see we're coming back for the retest. You can also technically see, right? And notice how in every example so far, you've seen the same thing, the one candle rule, right? And someone's like, where do you see the one candle rule? This down close candle, right? So yes, it is retesting back into the pre-market high as well, but we actually have the one candle rule here as well, right? So in this example, what am I looking to do, right? Break above, retest, strong price action in the one candle rule with the pre-market session. So many different confluences making this a super high probability setup for me, right? So I'm looking to enter into the trade here. Okay, our stop loss does have to be a break below this key level, right? Our stop loss doesn't have to be low of day, right? A lot of people come in and they think their stop loss has to be so, your stop loss shouldn't be too tight. It also shouldn't be too big. It's got to be that perfect balance, and you'll learn that over time. In my opinion, on this trade, it just needs to be a little bit below this previous 349 level, right? You could even honestly just have it right at 349 itself, right? But for me, right, the 349 is fine, or you can just have it literally at a break of the structure of 349.80s, okay? And then for our profit target,
could also use the ATR. Last ones I sold, same thing, break 20 seconds, total top value for the day.
Right, high of day on this example actually does give us about a 3R multiple, meaning for every $100 of risk, we're going to make $300 of profit, right? So that's something that you can target. I do know when we'll talk about how I took this trade after, this was a $25,000 trade for me, and this one ran pretty aggressively afterwards, right? But for this example, to simplify everything, to make sure you guys just understand how to trade it, this is what we're looking for. Very simple, okay? So we will look to buy into the position here, stop loss, just like I said, right over here, and profit target right up at highs right here, okay? So let's enter into this trade and let's see exactly what happens. Right, how fast was that? Okay, right into your profit target, you enter in on this candle 1, 2 minutes, you're done. You're done the day with, this is what, 9:41, 10 minutes. So this strategy for those people that have jobs, whatever it may be, job, school, other work commitments, this is the best if the market is trending and aggressive. This is only the best when the market is trending and aggressive. When the market is not aggressive, you know, buy side or sell side, then we may look at those other setups like I talked about, and that's why I have that playbook for me that I can trade different market cycles, right? But this one you can see very, very aggressive. This one pushed up really nicely, and we were done the day within 2 minutes, and we can call it a day. Now, this one actually did end up moving to the upside really, really nicely. So you can see May 27th, right? This was a $25,000 trade on Tesla. If I actually open this up really quickly.
What's up, guys? Welcome back.
Sorry. I just wanted to show you guys, right? This one, right, where we entered, okay, right over here, right, that one candle rule / the pre-market session. You can see I had it on that day as well, right? We enter in here, and then you can see the continuation this thing had afterwards. And when you were talking about that liquidity and how do you find it, you can see this 360, that we had this 354.79 key level, right? We had this 354.79 key level from the higher time frame, which we'll talk about in the next example.
Okay.
But this is basically how I took this trade, and this was a solid trade done pretty quickly.
Definitely, yeah. Well, $10,000 in 2 minutes. Again, though, I think what you're paid for, as you mentioned earlier, is your decision making and the speed of that and the confidence of that. Because in this case, as you mentioned earlier, as a con, hesitation. Like this is a prime example of if you hesitate even for a moment, even though it's a 1 minute chart, yes, you may have about two minutes there to really get your entry in. Regardless, I imagine in real time you've seen this explosion at the market open to the upside. Then you see price kind of slow back, come back, and pull back to that level. That's quite a bearish candle, even if it's on the 1 minute, quite a bearish candle before the entry is meant to take place. I can imagine, especially a newer trader, seeing that and start hesitating, thinking, oh, what's if we're collapsing? What's if this is a fake out, etc., etc. So you're paid, really. It sounds cool as a soundbite, $10,000, 2 minutes, but really you're paid for your execution. You're paid for with all the time and effort you put in, and probably the times where you went through that doubt, but still pushed through. You can see how a simple, yes, it's simple, right? Going back to that point, it's simple, and even the execution is simple, but it's being able to fight those inner demons, I bet, in terms of like, oh, maybe let me wait for an extra confirmation. Let me just wait a moment, or maybe, maybe not. Maybe it's
not the solid strategy.
Reality, if you do, as you see here, you're going to miss the trade. Right? By the time you've got over that, the trade's already happened. And then what ends up happening, no doubt, for those people who end up in that situation, is they then start chasing, right? And then that's how you end up back to where you were and having losses. And back to your point earlier, PTSD. That's where that builds up from. Well, I think that's going back to your point in terms of control the contract size to begin with, whilst you learn, will probably, I imagine, help to, hopefully help to remove those emotions and the hesitation a bit as you build your confidence up.
100%. And one thing I wanted to mention on that point was, so let's say you hesitated on this entry. So one thing before I'm going to talk about that, like you mentioned, earlier in the day when you see this, you already know this is the stock you're focusing on, right? That's the key, right? Boiling down.
It looks like he's yamming out.
Coming into the day.
Yeah.
I'm looking at like 3.
I was thinking that earlier. Well, I mean, because the thing is, it's on faster speed, right?
Probably. I think that's going back to your point in terms of control the contract size to begin with, whilst you learn.
Well, at one point earlier, when he was on the whiteboard, I'm like, yeah, this guy's fucking like added up right now or something, right? Just fucking did a line.
Help to, hopefully help to remove those emotions.
when he gave a fucking 20-minute PowerPoint presentation on a fucking hammer candle that's when I knew.
A bit as you build your confidence up.
100%. And one thing I wanted to mention on that point was, so let's say you hesitated on this entry. So one thing before I'm going to talk about that, like you mentioned, earlier in the day when you see this, you already know this is the stock you're focusing on, right? That's the key, right? Boiling down the stocks you're focusing on. So coming into the day, I'm looking at like 3 to 4 stocks, right?
I was going to say, it must watch more than 1.
1 or 2 right at the beginning of the morning that's showing the most strength or weakness, right? And then based off of that, I'm looking for an entry. So yes, the entry was within 1 or 2 minutes here, right? For sure. But I had so much time to plan the trade, right? Plan the trade, trade the plan. That's it, right? So when you plan the trade, you see it coming up, you see the displacement, you know it needs to retest this level, right? So there's nothing to fear. You know it needs to pull back. It can pull back however it likes to. Obviously, we need to look at price action in there. And then when it comes back, low risk entry, you see the entry, enter. That's it, right? Because the closer you're entering into that resistance and support, the better your risk to reward will be, right? The more money you'll make, right? But you just got to get rid of that fear. Now, the point that I was going to mention was, let's say you hesitated on this entry. If you hesitated and you entered in at the high of this candle close, or maybe even the open of this candle, right? We're up from our original entry, right? Even if it's coming down. But you enter here, especially on option contracts, because the way option contracts work, right? The delta starts moving up to the upside, especially as the stock moves aggressively to the upside, you want to start selling, right? You sell into strength on options, right? With futures, it's fixed. With options, because you have Greeks, you want to sell into strength. So if you're buying into strength on options, when that comes back down, your option contract is cooked. Like it's done. So that's why having this retest, this is the key. The breakout with options works. I've seen some people trade it. Doesn't have the highest win rate in my opinion. The retest has a high win rate. It has higher probability chance of it winning. High win rate, and it has a high risk to reward as well. Right. And as long as it has those 2 factors, for me, that's the highest setup or the best thing for me to trade consistently day over day over day. Right. So this is going to be that trade. Once again, if I had to end up playing this one out for a couple minutes here, you can see it holds that 1 candle rule and then just aggressively pushes to the upside, right? So that's this trade. This was the pre-market session. We talked about the first candle rule as well. Now we can finally get into the trade that you've most likely been waiting for, which is that Tesla swing position that I had. This was a $100,000 plus trade, and this was also using the 1 candle rule and a higher time frame. So let's get into that. So here is the final trade that we're going to be talking about today. This is the 1 candle rule. This was the Tesla trade I took. A lot of you guys that may have been watching this may have seen this trade that I took, right? This was a $100,000 trade, but how did I set this up to actually make that money, right? And what did I do that helped me stay in the trade? That's the key as well, because you'll see in the price action here, most people would have sold either too quickly or too late. What did I see in Tesla? There's a couple confluences I want to talk about before the 1 candle rule. Number 1, earnings, okay? So Tesla had earnings. Though they did not beat their earnings, right? They actually did not beat their earnings. We saw right after earnings an aggressive push up. Now, this is where experience comes in, right? This Tesla trade after, or actually a little bit before earnings. I took this before Trump came into office, right? And that was last year. It was my biggest trade. It was like a $140,000 trade last year, right? That I took. And funny enough, Umar took the same trade. He made $10 million. We won't talk about that, right? But so I took that trade right last year, knowing right that Trump was going to benefit Tesla at that point, right? That was the sentiment. Plus, there was some setups with for that one, it was actually the one candle rule as well, plus bull flag. But this one, exact same setup occurring. So what was the setup? Earnings, we see strong price action, and then that consolidation. Like I talked about earlier, the stock can only move up, down, or sideways. When you see a stock move up and sideways, it means buyers don't want it to come back and dip below. So when this started developing, I'm like, what are they trying to hold? Why are buyers trying to?
Pretty similar to what's happening right now, right? Pretty similar to what's happening right now with Tesla on the daily. Pretty similar. I know it's undercut and rallied back into the range right now.
About context clues, right? Context clues are really important. For me, what I realized was, okay, Tesla, very, very big downtrend for the recent couple, let's say a couple months, right? But then now we kind of based in this range, right? So we're kind of basing in range. Now we don't want to be in range specifically, right? But in the last, let's say,
flag. The letters are on. Fuck. And this thing. And we'll find out, right? Kind of wait and see. Does it do that or no? We're not.
2 weeks, Tesla actually ended up coming back to the upside aggressively back into this resistance. So what does that tell me? If that resistance breaks now, we're going to see a lot of momentum. Remember, we're on the 4-hour time frame this time. We're not on the 1 minute, we're on the 4-hour time frame. Okay, so how did I enter into this trade?
Pretty common, right? Pretty common thing before a breakout of a range. Like if you come to the top of the range, start consolidating right under it. Pretty common precursor.
Look for the lowest risk entries, even when we're swing trading, right? For me, we look for the highest down close candle, the previous highest down close candle. This occurs at this pivot structure right here, right? So you see this pivot structure and this down close candle right here. You literally just draw this out and you can see this is exactly where the stock is basing, right? The stock is basing at this key level. So when we see this key level in the stock basing, we also see that this is kind of putting in a flag pattern, right? Now, this isn't something that I may necessarily look at and be like, this is my entry signal, but there's confluences, right? We see the resistance kind of forming, we see the support, we see the one candle rule as well, and then we also see that Tesla had earnings and we had a really aggressive push up. So there was fundamental news about this that helped it push up, and then there was technicals that were backing it, okay? So this gave me a little bit more confluence to enter my trade. And for this one, I just want to show you guys, right? We can see we're on May 2nd here, okay? May 2nd. And you can see May 2nd, right, at 12 o'clock, I said Tesla swing thesis. Earnings, good, right? The earnings weren't good, but the reaction to earnings was good. Higher time frame flag pattern after uptrend with downtrend, 4-hour break at same level, lower risk trade, but also if this works, it can run, right? We'll most likely take 1 to 2 weeks out contracts, waiting for more price action, but this looks good. We'll let you know exact cons when I enter. Look at what was going on, right? The exact setup that I'm showing you, right? This is that one candle rule. I just decided to draw it out with the red lines, right? But this is the exact setup that I'm showing you here. So what did I do? I entered into this trade, right? And where was I looking to target and what was my stop loss for this? It's the exact same on the 4-hour and the 1 hour that you would do on the 1 minute, okay? So what I'm looking for here is that entry. My stop loss is a break below the 1 candle rule, okay? And then my profit target here, right, can be these highs up here. And plus, for me at least, my main targets was this level right here, right? This kind of 326 key level, 326. Now, this is a 2.07 risk to reward trade, and some people may be like, wait, you made $100,000, but you only did 2R, right? Very, very key to remember. Yes, I didn't, yes, technically this trade is 2R, but you'll see why it's not 2R when we actually get into how I entered and the specifics of it, right? So higher time frame was technically 2R trade what I'm risking, but when it actually ended up coming down, I actually ended up entering in a bigger position. So this is a starter position on this swing, but you'll see how I entered in a bit, right? So I just want to play this trade out just so you kind of see how it works out, right? So you can see right here, right? This was May 5th when it dipped, right? So May 5th / May 6th is when it dipped, right? We can see this, once again, I just said May 16, 295 calls, right? And then I said taking Tesla 295 calls. You can see this May 2nd, right? You can see the exact time frame. This is no editing or anything. 12:14. Targets will be pivot highs, right? And I said the exact contracts that I'm swinging. Now, you can see the trade started working out, whatever it may be. I want to show you guys here. May 5th, right, at 2:36, right, this is where I entered in my second position. Now, I trade from 9:30 to 11 a.m., but this is a swing position, so I'm just entering in when the trade actually validates its level, right? Added my full position on Tesla, looking good for a move to the upside. Stop is clear at the 270 level. Once again, that one candle rule, right, being shown very, very clearly here. And you can see the targets 327.50s and the key targets that you can scale out of if you want as well. You can also see how the risk to reward now changes, right? Because now I'm in my full position. Earlier I was in the starter position. This is my full position, okay? So starter position up here, right near this area. Now full position in here, right? So let's just average this out like down here, about a 3.5 to about 4-hour trade, okay? Now you start playing this trade out, right? Gaps up, right, within the following like 3-4 days, right, ends up gapping up, moving up into a profit target. This trade took about maybe a week and a half to develop fully, right? But this was a solid trade to the upside. Now, if we look over here, right, you can see green line equals take profit. You can see exactly where the take profit were. You can see exactly where the stop is. No editing or anything on this as well, right? This was Tesla. So this was the day Tesla opened up. Tesla first PT hit, right? I was guiding through this trade the whole time, right? But you can see $50,000 swing, and this was just half the position, right? But this is where I started taking some off, right? $50,000 on the, what day was this? On the 9th, right? So $50,000, and then as it kind of continued to the upside, 64,000, and then it ended up being 67, and then it ended up being 75 and 80 and 100, right? But those it took a couple more days to finally get up to those kind of key levels. Yeah, you can see here, right? So this is the following day, right? So $16,000, so 80,000 plus 16,000 ended up being over $100,000 trade, and now you can see just I had a trailer position as well. So that was basically that full Tesla swing trade. Same strategy, right? It's super simple strategy. Just understanding where buyers and sellers are interacting is the main objective of this. But once you understand that, you can trade basically any time frame, any market, any instrument, right? And it's a super simplified way to do it, as long as you have the discipline and patience to actually execute your setups and don't hesitate when they do come.
I missed it. Did he say why he took the initial position? Or was it just the whole thing he had written in the Discord? I think there was like no confirmation of anything, right? I think he just took it because like the setup. Because like the second ad was like following the rule he had outlined previously, but the first one he never really said why. Maybe I missed it. Whatever, who cares, right? Either way, who cares? Interesting. Interesting. Close that out. Not a particularly interesting video. I did not make a single note on that. Zero edge. Zero alpha derived from that thing. Future is about to break this flag. Here we go. No, not yet. Failed auction. Yeah, I give things some time, yeah. Also, let's lower this. That should be good. The 30-minute candle just printed. Okay. Okay. Hopefully we do this soon. I want to be awake for like seeing if we flip this level or not. What should we do? How's Ethereum, by the way? Same story. How'd Bebo's thing do? What did he say to buy? Mon. Still going. don't think there's too many videos left. Because I've watched most of these older ones, but I fell behind, so now I needed to catch up a bit. But I think we're almost caught up, basically. Maybe like 1 or 2 more left. Watch the tail in the next 30-year T-bill auction. What even is that? Like US? I need food. I need food. I need water. I'm hungry. Should we leave a video playing or something? Thing is, the only ones that are left are like these like ICT traders. Not that I don't care to watch it, but like I don't know if they explain the shit they're talking about, and I don't feel like sitting here looking up what all these goddamn terms mean. To be honest. Maybe we should, just out of curiosity. Alright, I'm gonna get food. I'm gonna be back in a sec. Boy is hungry. Where's this thing? Beyond Meat tomorrow will be jokes. Why do you say that? Should we go on that podcast? Put them onto real fucking trading game? Enough of these goddamn low rank fucking noobs, right? Like, can we get some like double digit rankers on that bitch or not, right? Enough of these like 4 digit, 5 digit rank shitters. I trade fiat for Bitcoin. You know, Bitcoin could go to 0 someday, right? All the chicks come to me for wood like Home Depot. She's probably a fucking virgin. If we start going here, like, this is basically it, right? Like, in terms of, like, starting to confirm this thing on the higher time frame, this is the beginning stages of it. Especially if we front run these spot orders again. It'll be the second time in a row they get front run. So it'll be very interesting to see if we can start flipping the zone and going. Whoops. If we can like flip this like golden pocket at 89, interesting, right? Very interesting development in the game. Interesting. Soon no one will sell you Bitcoin for fiat. Well, I hope we have some other kind of monetary system, right? Or else how are you going to use it? Singularity is coming. Imagine just Bitcoin gets cracked tomorrow. Quantum computing has a massive order of magnitude increase. probably don't even own a Bitcoin. Honestly, you sound like a fucking brokey to me, for being honest. It barely got 1,000 qubits. I need 50 million. It's not necessarily true, is it? Where is this thing? So I think you're also underestimating the progress, right? Like literally, like the CEO of Nvidia at one point, remember when he came out and he was like, yeah, quantum computing is like 30 years away. And then like 2 months later, he was like, oh shit, yeah, I was wrong about that. And now he's like, investing a bunch of money into quantum computing. No, I wouldn't put all your eggs in one basket. How about that? How about that? And like, it's not even, it's more so with the old wallets, right? It's more so an issue with the Genesis wallets. And it's not that they can just crack every single person's like current wallet, right? Because they changed at one point. Like Satoshi's wallet, for example, is like vulnerable. And the market cannot handle that much Bitcoin being dumped on the market. Let alone all the fear it would cause if people see the wallet becoming active, right? People be freaking the fuck out. My Gemini broke, what the hell? That's odd. Let's see what these things say. Let's see the current state of the world is looking like in terms of quantum. Okay, they definitely don't need 50 million. Does the other one say the same thing out of curiosity? apparently they need 2,000 to 10,000 logical qubits. Plus, like, the other issue about this is not so much like, what's it called? We also have to implement some like post-quantum cryptography protocol into the algorithm, right, or the protocol. And doing that is a lot easier said than done in terms of getting everybody to agree to do it and then implementing it. Because not only that, but then you have to change the block space on the protocol. Because the quantum keys, the post-quantum key size is much bigger than the current key sizes for encryption. Which is probably going to cause another huge dilemma, right? Wasn't there like a massive issue with people bitching with the block size in the past already? So you have to agree on something and then roll it all out. These things about to roll over, or what? Or what? Or what? Be interesting to watch negative point of control down there. Yeah, it seems like they both say the same thing. You need like 2,000 plus logical qubits. Seems like the estimates are quite far currently. Who knows, right? Who knows? Because that thing about this is like, who knows? Like the sciences can advance very quickly, right? There can be like one breakthrough in a certain area can like rapidly increase the speed. On top of also being able to leverage AI to assist in that. I don't want to watch another one of these videos, to be honest. I'm so tired. I just want to lay down and chill.
term that you coined, which one thing I did want to ask you, and I think the audience.
Should we watch Linda? Should we watch Linda yap? All these things nuke.
Would be annoyed if I didn't ask you. The term that you coined, which is turtle soup.
Turtle soup.
It's a phenomenon the last year or two in particular because someone's tried to not hijack it, but essentially coming up that they've created this concept. What are your thoughts in terms of developing concepts? What is the process of going about doing that?
The turtle soup came about when I was writing this Street Smarts book in 1996 with Larry Connors. And turtle soup was tongue-in-cheek at the time that turtle strategy of trend following had been popularized. And so we're like, well, when that fails, it's turtle soup. Chuckle, chuckle, chuckle.
Linda Raschke, a 40-year trading veteran who managed over $300 million.
I want people to understand the power of the pure technicals. I'm such a pure technician. You don't need news. You don't need order flow. You don't need all this extra stuff. You're playing with the best and brightest and smartest minds in the world who have better execution, less friction. So it's not a zero-sum game. It's a negative-sum game. The markets are always changing. Your last trait for being successful is that you must
$300
The #1 podcast in the trading space, the fastest growing, and that's thanks to every single
That's
one.
grocery money. Alright, we'll brush my teeth. I'm gonna run this bitch back.
con hip hop que micrometa. Les ofrezco texto fresco que no encuentro ni comentan. Ni comentan si medito letras. Busco con mi discoteca, no sonar en discoteca. Subiendo el listón desde chico en un Big 90. Mi conecta y nadie es de quien con reta. Mi condena en el micro fructifico sin concreta. Ritmos mixtos, listo han visto mientras pinto mi historieta. Les transmito el mundo flash fallo, letras dicto el lo rayo, emito rayos como signo de que como en sí no fallo. Sin notar yo hallo el micro y en modo del chico gallo, rap yo dicto y callo mito que quieren ser mito gallo. Hoy mi vi que el flow destapa, si el shit dejó en el mapa, este rapa no derrapa, se destaca mi cantera. Conviví lejos de trampa y coincidí mejor etapa, coincidí mejor etapas marcadas en mi carrera, ya los tengo de rodillas y les llevo en textos millas, este flow ninja, selecto pa' que entrego entre comillas. Mientras rap de regenero, fije, pije, creo arte y si me aparte por ser bueno y genero un género aparte. A practicar, repara y sube a tarimas y cada cumple. Si imitan mi táctica porque mi handicap asume. Más rimas en calambures, me arriman hasta las nubes. Y qué milagro que mis lágrimas en rap las cure. Con el micro los mandos en el beat, veo los bandos, hoy le da guerra a mi beat. Fue el coliseo romano, saco un hit. Si me vicio ni video rodado y si los vi feo es porque los vi, feo sonando.
Where were we?
Before we get into this episode, guys, I just want to ask for one favor. 52% of you aren't subscribed to the channel currently. So if you can just hit like and subscribe right now, it will help us more than you will ever know. It will help us bring you and continue to bring you the best 7- and 8-figure traders from around the world. Thank you. Now let's get into this episode. Welcome everyone back to the Words of Wisdom podcast. We are back once again, and we are still on our incredible US tour. We're in our final state, and that is, I would say sunny Florida, but I brought the rain from England with me. So, but we are in Florida, and we are very much excited for this particular podcast. We're still the #1 trading podcast in the world and the fastest growing, thanks to all of you and our incredible guests. And a huge shout out to TradeZella for allowing this tour to take place, the #1 trading tool in the market for backtesting, in-depth analytics, and automated journaling. So make sure you check them out. But today, this is a podcast I've been looking forward to for a very, very long time. Before we ever scheduled it, I just hoped that one day we would be able to make it happen. And thankfully, we've been honored today to be able to do so. And we are joined by a 40-plus year trading veteran, known as one of the very best female traders in the world.
Marshall, yo, what's good? Not much, just chilling, babysitting some trades and watching some interviews with traders. What's good with you, my boy? My boy. What's good with you?
the author of Trading Sardines. And we are with the one and only Linda Raschke.
Thank you, Riz. Thank you for having me.
It's my absolute pleasure.
As a guest.
And I'd like to go straight into something, because as I mentioned, I literally read an article on the way here, which had you on a list of one of the very best female traders in the world. And I'd just love to ask, what would you say separates yourself? Is there one thing that you could really pinpoint that separates yourself from many others over the years who have tried and maybe not have made it in trading?
First of all, I'd like to say I hope it's not female traders, because there's not that many of them, and I'd like to just be recognized for the bottom line. And I think that is one of the things that's so defining about our industry, is that it doesn't care about your gender or your race or where you come from. It's not female or male specific unless you're on an institutional desk at Goldman Sachs. So for everybody out there that comes from all sorts of different ages and backgrounds and circumstances, just keep that in mind. It has nothing to do with being male or female. It's all 100% bottom line business. With that said, I can only tell you about my own personal experiences, because there's so many different variables and components that go up into an individual's makeup. And so I don't know, I can't speak for others why perhaps they failed. I can suggest some traits that I felt that were strong suits of mine that opened that door for me. And the first one would be, I have a very good ability to be single-minded, incredibly focused. And I think that that single-mindedness, and that came from several different things. I mean, I used to be a pianist when I was growing up. I'd play 6 hours at a time for practicing. And so that takes a lot of concentration and ability just to focus. But it's very important for not only trading, but any peak performance sports, be it tennis, golf, whatever. You must tune out everything else and have zero distractions. And so just be mindful, for those of you that are listening to this, how many times you are pulled outside of your flow by social media or TV or noise or distractions. And I don't think that you have great odds of long-term success as long as you don't make concerted efforts to start to eliminate those things. Another thing was, I had a lot of periods early in my life, early maybe like 14 through 24, where I had extreme adversity. And everybody has adversity that comes in different forms. It could be poverty, it could be abuse, it could be, health issues, it could be a lot of different things. But I think that once you have overcome some type of adversity, particularly during those teenage years or early years, it builds characters and it allows you to withstand stressors later on in life. And so if you haven't had that experience or ability to overcome adversity early on, you need to be extra careful. If all of a sudden you hit your 30s and you think life is easy cruising, you're going to be a much more fragile type of makeup when something extraordinary does happen, which it will inevitably, So that would be the number two thing, And in that process of overcoming adversity, I also think that you gain tremendous self-confidence and belief in yourself. And so that's the other danger about listening to opinions of others or being influenced by others in the marketplace, is every time you do that, what your subconscious is saying is, I don't truly trust myself or have the belief in myself to find my own way. And it is a long journey. It's a journey of trial and error.
Yeah,
and I would say that, you have to at least make it through the first 10 years. Sometimes we can have initial early successes, and it might be a result of market environment or things. But I think ultimately you are trying to go towards looking for the ingredients that would ensure success generation after generation, decade after decade, and out there, 20 years from now being successful.
No, I couldn't agree more. And that is exactly what we're trying to highlight throughout this podcast, the things that will allow people to progress and to make leaps and bounds within their journey, but not just for a short period of time. No doubt you've probably seen many traders who came along throughout your career who performed quite well for a period of time. Maybe they decided to leave the industry and move on to other things, but many who may have performed very well, as you said, maybe it was market conditions or certain market environments or market event that they were able to take advantage of, and unfortunately maybe didn't perform beyond that. And so that's why it's pivotal, and that's why we're so excited to be able to have someone like yourself who's been able to observe all those things but have such a long-standing career. And just to go back to your very original point, which is I think extremely valid, which is it doesn't matter in terms of your background, in terms of your gender, none of that things matters in the markets, and the bottom line being the most important thing. I couldn't agree more. And that's why in terms of this podcast, we love to highlight those principles, the principles that make that bottom line take place. And I love what you said in terms of focus, because that is something, as you mentioned, social media as an example, I think that's a huge distraction. It has its benefits, of course, like being able to interact with other traders, because one key difference from when you started out to now is that when you started out, it was more floor-based, and therefore you're in an environment of traders all around and you're able to observe what different people are doing. But now it's very isolated, very much at home, but then social media is available but can be a huge distraction. What do you think traders should be looking for when they are utilizing, say, whether it's social media or some sort of community? What should they be focused on, and then what should they sort of be avoiding in terms of to keep their focus on what actually matters in terms of the markets?
Well, I do think that the mediums of communication have changed. They show that the number of people that actually meet somebody else in person that might become their mate is like down by 90%. You're meeting people online, and it has become the norm for definitely social interaction in a lot of ways. So you just simply need to differentiate between the social interaction part of it versus what is going to support you in your business goals. And I think that you can draw some boundaries. I think a person that talked about this that's well known as a trading coach is Steve Ward, and having these overlapping, intersecting circles. So during the trading day, you either make it a point just to do your own work, have your own thoughts, or there are some alternatives. For example, I use Skype. I have 2 or 3 buddies that, I've been on Skype with for like 30 years. And we don't talk about trade ideas. It's more just the humor, or if a report comes out or something interesting. But there's nothing to say that in the evening you can't joke around with your friends, scroll through Instagram reels, or post on Facebook, or whatever your medium is towards reaching out with other people. And then with that said, also make a conscious effort. If it means going to the gym or walking your dog, or even at the store, it's still very important to, say to the checkout person, oh, thank you very much. Hope you're having a good day. Or any time that you can carry on a live conversation with people, it goes so far further in terms of benefiting our own neurotransmitters and things like that. So it's there's so many solutions, you just have to be creative in finding them. And lastly, recognizing the addiction side of the equation. And that is what you must figure out how to pull free from. Anything that's clicking the mouse, that's interacting with Twitter, social media, Instagram, TikTok, all these things, they are manipulated to juice that dopamine. You are a puppet that's being manipulated to juice that dopamine. And that's why the uproar against TikTok sort of hijacking our youth there with their algorithms.
Right? All the algorithms are essentially tailored to draw max engagement from you, right? So rage baiting, dopamine spikes, etc. Very true, very true.
And there's so many other ways that you can do that. For example, every time you hit a tennis ball or a golf ball, it's the same thing. You're releasing dopamine. And do your own research, read up on it, and try and think of 1 or 2 other avenues that you can still get that same little jolt.
I loved what you said at the end there in terms of recognizing the addiction or being aware of what's going on and trying to be more proactive in making those changes. Because I think that's where a large part of the term drifting from Outwitting the Devil by Napoleon Hill, essentially just you're doing stuff without even realizing you're just drifting along. And I think, unfortunately, a lot of us and a lot of traders out there, and it could even be in periods of time in our lives, but a lot of us find ourselves in those moments where we're just kind of like robots almost, just doing things without being aware of them. And only when you bring that awareness in, as you mentioned, can you then start to make changes or start to at least recognize where your faults are or even where you're doing things right. One thing I'd love to ask you, which is in terms of trading, like even to this day, you're very, like even today, you're posting charts, futures charts on Twitter, and I thought, or X now, and I just love to know, what is the drive? Is trading almost in your DNA at this point? Do you think?
I wouldn't say that it's in my DNA, and I'm not trading full time. I'm not trading full leverage in the size that I used to do. I was actually supposed to go out to the barn and ride, but my horse colicked, in the middle of last night. So I just was like, well, I might as well sit here. It's raining and so forth. But I almost always have a position on. I can't help it. It's just because it's like you're walking down the sidewalk, you see a $1 bill, well, you pick it up, right? I mean, it's not anything huge, but it's just yeah, okay. And I know my game. And so there's a part of me. I just said, on one hand, you need to do your own work. So some things I'm not going to post necessarily on a timely basis, but I want people to understand the power of the pure technicals. I'm such a pure technician, and I can show you so many fabulous things that you don't need news, you don't need order flow, you don't need all this extra stuff. Okay. And so sometimes I do that to say, see, this is what a trend day looks like. This is a pattern. Eat the tail. Now you go see if you can find 20 examples of that yourself. And so it's just my little way of, hopefully pushing a few people. Oh, that looks interesting. Oh, let me see if I can find some past chart examples. Oh, yeah, it's because I feel kind of very strongly at this point what is going to be durable and robust and hold the, the test of time. And that's a tricky issue because the markets are always changing. So there's your last trait for being successful is that you must have the ability to adapt. So the So's Bandit game came and went. There's all kinds of games. I call them games, but they might be playbooks that have come and gone over the ages. Obviously, the cliche adage for right now is it doesn't take money or brains to make money in a bull market. And so this era of hyper liquidity that hopefully will last for another 2-3 years, we don't know, but it's not going to be there forever. And how are you going to adapt and change your game, 10 years from now, perhaps, when we could just be in a long, flat, sideways period for a decade, and the momentum game will completely go away. So, yeah, that adaptability is
right?
really
We were just talking about this like an hour ago. True.
Factor. But, as far as myself, I mean, it's just fun. I think it's probably true with anybody that's become proficient in something. I can't play the piano like I used to, but I have friends. Larry McMillan's a very brilliant pianist. People probably wouldn't know that about him. He puts out an option service. but he can sit down and just rattle stuff off the keyboard up and down, and there's no better feeling in the world, you know. Same thing with, you know, if you're a great sports player, tennis, or I mean, maybe you're not competitive at golf or tennis, but you take your grandchild out on the course, and, you know, you can play a great game, and it's another way of getting you into that glorious state of flow. That's cliche, but it's true.
In terms of being able to pivot, like, are there key things that people can look out for when it's time to pivot, or things that can help them to make those, you know, be able to change and adapt to the markets or the times?
Well, there's one thing that's really important in the markets, and that is, and this is credit to humans over AI and artificial intelligence and these things, and part of this is my own opinion. I don't know if it's substantiated anywhere, but this ability to process relationships, that's what makes a successful trader, okay? So it's noticing if two data points are converging or moving further away. It could be a relationship between two different markets. It could be a relationship in terms of, you know, pricing models. It could be a relationship in terms of where are we trading relative to the opening price. So same thing, what leads to outliers and aberrations, which there's huge gold if you can recognize an outlier as it's unfolding. And I'm not talking about an overnight event-driven type of situation, but more, for example, when yield curve which had been banded in a banded type of range, or just say interest rates in general had been in a banded range for many decades, and the yields on the 30-year bonds started going outside of that range. Okay, so human instinct, anytime we start to see a relationship that expands past what we're used to or our comfort zone, people want to go in and immediately try and arbitrage that or converge it to look for that reversion back to the mean. Does that make sense so far?
Yeah.
So I think humans feel very comfortable playing this reversion to the mean type of game. But your ability to recognize when something is not going to revert back to the mean but continue on in that direction is really where the superstar traders are made. And so I think that a trader with experience, that's another edge, you know, stay in the game long enough and you will build up experience. Once you have that experience and you can recognize something like that unfolding, I think that you have the ability to process that perhaps a little bit more quickly than, you know, the AI algorithms, which are naturally trained on past data, you see. So, and we can't tell an algorithm, you know, this is expected or normal and this is not. But I do think a human with experience can see when something unusual is beginning to happen.
Profitable trading really boils
I
down
mean, that's just a nonsense statement, right? AI will certainly will do that at some point.
Between the years 2016 and 2020,
much better than we
opportunity
can.
that was available, as well as volatility to take advantage of, was at the highest it's ever been. And all of that really pointed towards one man, President Donald Trump. During his period in office, else. For volatility, absolutely single. Thank you. Trader 8 and 400 of tools. Go back to the
education. Understanding the importance of relationships, that's something that you don't have to have a college education for. It's a different type of intelligence. It's not a matter of, oh, you passed the SAT with, 1,500, because I know a lot of these top proprietary firms will look for people that have been from Ivy League schools and so forth. But understanding that if you don't have that type of education, there's that type of intelligence also where if you can take a cube and, they'll have the little puzzle pieces and only show part of it and say, okay, which is the missing piece that goes and fills this little back hole back here, you see? And so it's this spatial relationship, this other type of intelligence. I think that's very important for trading and the markets. And it takes you out of that whole pressure to be in that quant realm, to be able to quantify things, even though I do believe a lot in modeling and so forth. But I kind of went off in 5 different tangents on this matter of relationships. Mm-hmm. But just think about it. Think about if you're in the marketplace and you put on a trade. Let's say you had no idea what that market was doing initially, but for whatever reason, you put on that trade and now you're watching it for 5 minutes. You have a much better feel as what that market is doing because now you're watching the price action relative to your entry price. See? Mm-hmm. So it ends up being sort of this organic, holistic type of I hate that word intuitive, or feeling, but it is a gestalt type of thing,
That was my question. To go off on that in terms of the AI trading and sort of algos. How important as an individual trader though? How much play does intuition, or I know you didn't like that word, so I apologize.
Okay.
How much does that gut feeling, that intuition, how much does that play into your trading, or just generally as traders and traders you've interacted with? How much does that come into trading?
Well, I always have my homework sheet from the night before, so it's very basic too. I look to buy, look to sell, something, and then I might set up 20 different markets, and I might make trades in 3 or 5 of them because it's very much a numbers game for me. I strongly believe in fat tails, and I strongly believe that the bulk of my profitability will come from recognizing and riding one of those, even if it's just for a day. So the markets are so bountiful in these fat tails, and people are always cutting off their nose to spite their face, playing for little profit targets. But that's a really important concept to study. How can you capture these outliers, even if it's not an event driven, but let's say, for example, where do the larger swings come from? What are the pre-existing conditions that lead to a better move on, say, a 2-hour chart, even that type of study. So it's the intuition word. I'm the worst if it comes to intuition. I'll get it wrong every time. I'll get it wrong every time trying to analyze news or macro. Trust me, I know that. But intuition technically is a compounding of all your experience. See? So if you've been in the markets for 30, 40 years, the compounding of all the experience in the charts that you've seen over and over and over is what has created this area in your subconscious or unconscious, whatever you want to call it. And so a little bit of that bubbles up. And that's what intuition is in my definition. So there's a lot of times where I can give you a really good example because it happened today. And it'll also show you I get caught in little stuff like everybody else. For whatever reason, coffee's been having this prolonged coil, and I know better than to try and go in there and get into these dead markets until they come to life. But I was waiting for a little sign yesterday. Will it come to life? And it started on, early on coming to life. So I bought coffee and it took out the little swing high and stuff. And then I always sort of analyze the positions in the middle of the day, and it wasn't looking so great. It had come back down, and then it was down a little bit below where I bought it from. And then all of a sudden I'm watching it and I'm going, this is another freaking false breakout, isn't it? Yeah, you got me again. And I just, flatten it. And I was like, okay, because that happens to me all the time. I know I'm wrong, flatten. And then today, I wasn't really paying attention to much of anything, but I have my little quote board I'm watching, and I'm like, I'll be a son of a gun. That little friggin' market is up, $4, $4.50 when I sit down. I'm like, I know you little weasel, you. So I didn't even have to look at a chart, because if it was going to be a test reject, it would have had continuation to the downside. All right. That's the expected price action. If something fails, you want to see it continue in the direction of the failure, not just be that little, 1-day trap. So it was starting back up, and I just bought it at the market. I didn't even have charts. They were all in 10-minute delayed on this computer, And then all of a sudden it's up like 13 handles, and it was my biggest winner of the day. So that was intuition in terms of not knowing what it was going to do, but I've seen the markets do this to me before. Sometimes they like to have that last shake of the apple tree before they then do the real move. And you see that, and if you've seen it 100 times, that's part of why it takes so long to really feel confident about trading, is just because we've seen it and learned the hard way a million times. But then you can act with so much more confidence when you do see it. So that's my definition of intuition.
I love it. And it's backed by your experience, as you said. And do you believe that then your confidence to be able to act on that intuition, that experience, comes from seeing those patterns over time, seeing the markets move over time in the same ways and present very similar situations? And then maybe the first few times there's difficulty to be able to trust that intuition, that experience, but the confidence comes from you taking the actions over time. And then as you start to see results, start to see that the intuition and technically all the experience is sending you on a correct path, that's where you build the confidence to be able to trust it?
Well, I think that confidence is something that a person just has or doesn't have. Okay. If they didn't have confidence somewhere, perhaps from prior experiences, perhaps they were good in sports when they were young, perhaps they were good in a subject at school, there has to be some innate sense of confidence, which is really belief in yourself. Okay. But we never know for sure. When I do stuff now, I don't even think about it. It's like, I don't want to have to process anything during the day. I'm not as good with words. I'm better with the charts and numbers and relationships. And if I had to describe to myself what I was doing ahead of time, I would just get so tangled up in all the words, I would never pull the trigger. So it's more like, it's automatic, but I'll keep my eye on it for a minute or two. Unlike yesterday where I got caught up in other things, and all of a sudden I'm looking, I was like, I really kind of forgot to put that position on.
In terms of going back, I know early on in Korea, there was a moment where you had lost a large sum of money. I think it was for you at the time, it was 80.
Which time?
Well, that's one time. I did love one of the chapters in your book, which thank you for sending that to me, by the way. Incredible book. If you haven't seen that, make sure you check that out, Trading Sardines. And I loved one of the chapter names, which was Oops. I just love that. As a trading book, that just sounds like, I think everyone could relate to even just the chapter name, and they could probably try and guess what would be in there. But I think very early on, there was 80,000 plus, 86, 89,000.
Oh, when I blew out, you mean?
Yeah.
Selling straddles and takeover stock that time?
That time, yes.
Oh, yeah.
I wanted to ask, what was it that kept you in the game, kept you pushing on, even going through that experience, which no doubt...
Because I didn't want to file bankruptcy, which would have been my only option in age 22. I really didn't have any choice. I was an indentured servant into the business. It was a really miserable next 5 years, because every dime I made was paying back the clearing firm. I'm probably the only fool out there that paid back 100 cents on the dollar. Later on, I found out everybody negotiated these deals, but clearing firms made a lot of money off of me. So
what was the mindset from going from there? And what would you say that really helped you to go from that process of, was that quite early on into your trading career?
Yeah, like the first year.
Really?
Yes.
Wow.
And then, going into later in your career, you've been highlighted in New Market Wizards by Jack Schwager. You managed a hedge fund with over $100 million.
300 million, yeah. Yeah.
Triple that number.
Well,
300
it was actually 250, but it was on 2-to-1 leverage. So we had a Class B shares. It was twice the Class A shares, yes.
Let's take a break for a minute, guys, because I want to tell you about our sponsor, TradeZella. TradeZella, or you trader, you to make 20 tests to $1 million two-step plan. They have a plan. Just access to more details in all links in the description below.
And reaching those sort of heights in your career?
I never thought about it. I never even thought about it once. I mean, I am very much a day-to-day person. I get superstitious about looking too far down the road. I do. I want to stay in the moment and just do the best job I can at the time. And with that said, there was one time, I mentioned it too in the book very early on. I confess that I had a bad illness at the time. It was an immune deficiency thing. And I just really was a vegetable for about 2 years. And I saw an infomercial on late night TV that was Tony Robbins, and it was the cassette tapes. So that tells you just how long ago it was, his cassette tapes. And he went through this process, write down goals. I listened to a tape every day, half an hour after the close. And I even had an assistant then. I don't know why, because we weren't even trading. I was like, okay, we're going to listen to these things, And I was just hoping for some tips on, restoring my vitality, and goodness knows. And he said, well, write down your goal, type of thing. And I wrote down I wanted to make X amount of dollars within, 3 years. And that was about the only time I ever did that. And I did it in half the time.
Wow.
And ever since then, I'll just tell you one other profound moment in my life. And I was trading by myself. I'd left the trading floor. I was out of my home office, which consisted of a $1,000 telephone line to get the data, and another $1,000 to it wasn't Monchek Weber, it was Quotron, right? Yeah. So $2,000, and I don't even have charts. People have no idea how good they have it now, right? And I used to write down my, P&L every day and keep this running tally of, how my account balance was. And I clearly remember it was like sometime in July, and I think it was 1986, maybe 86 or 87. And I kind of became impressed with myself, right? I'm like, oh, wow, look at this, Kiss of death. I don't think I reached a new high water mark for 5 months, after that. And I'm like, I am never again looking at my daily balances. I know in my head if I'm up or down. I know how much a position made or not. But even with my hedge fund, and I was a principal trader for several other funds, and I started my own. I started an offshore fund. People don't know about that one. And then my main fund, the Granite Fund, which was the one that was, I think we were ranked 17th out of 4,500 for a top 5-year performance. And even when I had that, I had all my money, and I never had a separate trading account. So all my money was in my own fund on 2-to-1 leverage. I never had any idea what it was. My business manager took care of the taxes, so I didn't see that. And I had another colleague who wrote down all, in an Excel sheet and stuff, the P&L, and kept the balances so that our investors could see that because they want to know. And I never looked at it once. And I think that was what allowed me to keep on such an emotional even keel, not get high if there was a big win, not get low if there was a losing win, a losing trade. But trust me, if you've been trading that long, you've got a pretty good idea just exactly where you stand. And so I could truly stay focused 100% on the process. And that was a super strength for me, just staying focused on the process. And that is darn near impossible if you are a newer trader starting out and you have an account size of $20,000 or $30,000, or you don't have money set aside to live off of for 1.5 to 2 years. It's a very big challenge. You either better have a rich uncle that's going to die and leave you a ton of money, or you got to, scrap and claw and get some people to believe in you to put a little pool of money together. But you cannot trade properly when you are worried about losing, or watching even the fluctuations during the day of the P&L. So that's a big hurdle for a lot of people.
It definitely is. And I think it's such a valuable lesson because, as you say, if that was something that helped you to stay focused on the process, then I would imagine that a lot more people who are hopefully listening to this will be able to take action on that as well and try and implement that themselves. Because as you say, if you're trading with much smaller capital as well, especially starting out, that is the focus. You're focusing on that P&L consistently. You're focusing on trying to avoid loss. Every loss is really a painful experience when by focusing, I think what the misconception is rather than focusing on the monetary aspect, which is of course why a lot of people get into trading in the first place, by focusing on that, it rather heightens the emotions, because the one thing guaranteed in trading is that you will lose. And then when you do lose, if the one thing that you're really focused on is the monetary aspect, you're only going to have a negative experience when that takes place, versus by focusing on the process, you then, yes, you'll have losses, yes, you'll have wins, but as a result, that's usually how you'll end up making money overall as a byproduct of focusing on that process. But how important, in terms of focusing on the process, how important is that?
Before we continue this, did we close above it? Damn, we did. Okay. We'll close out some of these shorts. Okay. Okay, we have now closed that shit. Part of it. I closed 75% of both the shorts. I'll leave it like this for now. If we start to roll over, then we'll add some back. And be mindful of closing some of the long. But that should do it for now. Probably set some alarms below too, right? Put that thingity thing there.
For traders to be doing. And would you be able to define process from your standpoint?
Absolutely. Process is the routines and the rituals for starters. And I mean, those are very important. You know, at the end of the day, some people might write down their numbers or their trades or do some type of logging. You know, the process of when are you going to put together your game plan for the next day or scroll through your charts. The more regular and consistent you can be at doing it at the same time, the same way, it's very important, you know, to do that. And then another thing that was important for me, and I think people might have to be creative in doing this, was setting up your own support system. So when I started off, obviously, I wasn't married. I didn't have kids. I didn't even have a car. I could lead a very frugal lifestyle with a roommate, you know, and not spend hardly any money. And so I didn't need much to live off. And then later on, when I had my fund and I was married and I did have a kid, I was blessed in that my husband was Mr. Mom. So he took over the duties of doing the grocery shopping, the cooking, taking the kid to, you know, parent-teacher conferences.
And
that
sugar
could
mama.
allow me just to focus 100% on the business. And then lastly, as I became successful, I had a business manager. Very important if you're going to run a business such as a fund. And all the phones went to her. All the phone calls, all the client interaction, and she was in another state. And I would, you know, at each month mail her up a packet of bills. She'd take care of everything. So I never had to deal with, other than the due diligence visits that the asset allocators come and pay to your office. I never had to deal with that. And it's a lot of extra work. So I do think there is room for people that are on the verge of being right where they want to be to pool resources. You see, maybe pool a common office space where you can maybe get, you know, one gal Friday to do errands and, you know, pay bills or whatever it might be for you. It just depends on how badly you want something, really.
A large part of the conversation leads us back to what you mentioned very early on, which is just being able to focus on what will generate results overall, you know, especially within your trading, be able to focus on the trading itself, the process itself, versus all these external factors in life and you know, as part of, you know, going into the business side, that can distract you and take away your energy and take away your focus from those things. And it sounds like to be able to be a high performance trader within the industry, you need to have that focus on the actual trading element itself, have a main focus and main attention on that. Like, did you have during your career where you focused on other businesses outside of trading? Did you have any ventures outside of trading that you were focused on as well, or were you purely focused on the trading side?
No, it was pretty much purely trading. I mean, I went through a period where I had my first divorce, you know, and I only had one divorce. Okay. my first of 10 divorces. Yes, I'm such a Palm Beach socialite there, you know, but, you know, my one divorce. And at that time, my husband was firmly convinced that I was hiding money offshore, which was not true. And, but, you know, I had forensic accountants coming and doing, oh my God, so much ridiculous stuff. So I had two fabulous people working for me, my business manager and a tech guy. I'm like, I really have to keep these people because I know when all this is water under the bridge, I want to continue on with these people. Yeah. And so I had started a sort of like a little chat room type of thing, trading room. And Ron Shear had been a friend. He had started a group of prop shops. Generic was the name of them. And he was actually the one who created the MISL, which was the Amex futures on the American Stock Exchange. Big innovator. I think he still dabbles in the markets today. Just smart guy. And at some point, I don't know how many prop shops he had, like 70 across the country. Wow. And, you know, I'd gone up to visit him one day and he said, man, I was just thinking about doing this little thing, you know, just to put out some ideas. And he goes, I'll pay you, you know, to create, you know, ideas just for my prop shop traders all day, you know. I said, well, I really didn't want to do that, but I had somebody else that had contacted me who loved stock chart addict. I'm not going to mention names because that's not irrelevant to this particular podcast that we're doing, but he was really good. And so I said, hey, Joe Blow, I've got something. Are you interested in it? Sure enough, he was. He's Mr. Personality. So we got a little business going there for a couple of years and I could pay everybody. And then, you know, eventually it subsided. But no, I mean, I've pretty much eat, breathe, you know, drink markets all my entire life. And I liked it that way.
Definitely. No, the reason I asked that is because I know that a lot of traders, from my interaction with them, their goals is to essentially try and achieve and replicate what you have. And I think it's important to highlight how much focus in towards, which is interesting because as you mentioned earlier, you weren't someone who would write goals or anything like that. So it wasn't necessarily something that you did, but you had that as a goal. But you were so again focused on the day to day of how do I perform today? What do I need to do today to continue to progress within this career? And it's very interesting actually that side of things because, as I said, a lot of interaction I have with the general community is they have these goals of achieving 7, 8, 9 figures, having funds, and a large part of me does believe that they don't truly understand what it takes to get there. Which I'm loving this conversation because I think it really highlights that focus and that level of focus, not only on the task, but also to a degree, maybe not spending a lot of time goal setting on whatever that goal may be and actually just focusing on what's going to get you there, but also how to achieve hyper success on that level, you can't allow your focus to start looking at other outside things as well. But also what I would ask you actually is off the back of that, what's the reality, do you think, of people being able to replicate that level of success? Because I do believe traders can be successful and make good money from the markets, and it might not be something that they do for 40 years. It might be something that they do for 10, 20, but then they, be able to invest those profits accordingly and be able to then transition elsewhere.
Well, I think if you trade, you do it because you enjoy the game. You love the game. I mean, my best friend lives down the street.
Gotta love the
she's
game,
in her 80s.
guys.
She gets up at 7 a.m. every morning to play
Feel
bridge
me?
on Bridge Base, and she's playing with people on the other side of the world. She went to Las Vegas to play a bridge tournament. She's like, oh my God, Linda, it was so hard. But she's like a master bridge player, So she doesn't have to do that. She's, her husband passed many years ago, and she's up at 7 a.m. on a Sunday morning playing bridge because she loves it. So if you really love the trading, okay, you're not going to stop and then take those profits and go become an investor. The main reason why you would do that would be if you couldn't withstand the pace and energy and time that it takes, because it takes an inordinate amount of time and resources, period, to the exclusion of not having much of an outside life.
Yeah.
But if you think about a top tennis player, okay, Serena Williams, some of the people, Djokovic. What do you think Djokovic does? He eats, breathes, and sleeps tennis day in, day out, 24/7. He has his health coach. He has his mental coach. He has his private masseuse. Yes, he has a wife, and she keeps the family running. But he is always working on something, always. And so it's the same thing with trading. You want to be at that level. That's what it takes. Any sports player, a professional pianist, a concert pianist, or opera singer, or musician, that you do it because that is your essence of who you are. And so. In terms of raw numbers, here's a little bit of an eye-opener for you. Now, I'm pretty confident that these statistics still hold true. Revco, when there was a Revco, which was a major clearing firm here in the United States in the futures side, had done a study of all of their accounts. And now Revco was not like a little fly-by-night, brokerage firm. They were a major FCM with, a significant amount of capital. And they did a study of what percentage of their accounts were profitable at the end of the year. Profitable, just by even $1. And it was under 10%. Okay. Hundreds of thousands of accounts, less than 10% are profitable. And these, for most part, were decent traders. And then it's not just being profitable. What percent do you think are actually making their living? Meaning you can pay your mortgage, you can put your kids through college, you can, sock money away, take nice vacations without the extra services that you're selling, because a lot of people out there, as you know, make a lot of money selling subscriptions and, other things, and more power to them. That's fine. I think it's very difficult to be a full-time trader concentrating and giving all these seminars and webinars and, all these other things.
Yeah.
It might be doing a service for people and exposing them to different things, but my opinion is if you are a super good trader, it's a pain in the butt doing some of those other things. It just is a resource hog, a memory hog. It just, then you're answering all these emails. And I've been there. I did that I did a few, annual workshop thing, and I spend the next 2 months answering questions, and I'm like, oh my God, why did I? So, but I do think it's about 2%, maybe. And so then later on, about 10, 15 years later, I asked some good friends at TradeStation, actually, and because I was on the institutional desk, and they can't disclose yes or no, but I was kind of like, well, this was a study that was done, 10, 12 years ago. Do you think it's sort of along the same lines? It's yeah. So if people understand that, let's take all the open accounts right now.
Pretty low, right? Pretty low, guys. Pretty low. Let's not kid ourselves. Right, if you really think about it, trading is actually easy as fuck, right? To become a professional, profitable trader. Think about it. In NBA, there's 20 players per team, 30 teams. So that's it. That's how many people in the world are in the fucking NBA. Whereas in trading, it's 2% of the entire population of traders. Every two in 100 people do it, right? So yeah. That's why I always say, playing Call of Duty and whatnot professionally was fucking infinitely harder than this shit. It's just a joke. As long as you're disciplined, this shit's easy. Easy money, right? Easy money sniper.
The funny money and the diamond hands and the checks and all that kind of stuff. And of course, crypto's an insane world right now. I got a story for you there too that will really blow you away, but I'm digressing. But take all these accounts that are out there now and say, who is going to be profitable 5 years from now? And I bet you it'll be about 5%. 5%.
So the numbers not really shifting at all.
I don't think so. No, because you're playing with the best and brightest and smartest minds in the world who have better execution than you do, less friction than you do. As a retail trader, you still have the VIG, which is, the bid ask, the commissions, the slippage, all these other variables. So it's not a zero-sum game. It's a negative-sum game that you have to overcome against all the other biggest, baddest, brightest minds out there. And, I love
That's not true, though. That's not true. Like, I think they make it seem this way. Like, we just finished watching like a bunch of these traders going over their trading plans, right? How many of these people are fucking 5,000 IQ gigabrain traders? How many are just following a simple fucking repeatable strategy they can do over and over?
Selves. And we are all overly optimistic about how smart we are, We might just be average, but we still think we're smarter than the next person, Yeah. And we have cognitive biases, whether you recognize it or not, or you want to admit it or not. And that's also a huge downfall for people. There's 40 different types of cognitive biases that you can research on the internet. And the biggest cognitive bias, do you know what cognitive biases are? The anchoring, the, recency bias, all these types of things. The biggest cognitive biases is, oh, none of those apply to me. I don't have any cognitive biases.
Yeah.
Well, no reasonable human thinks
I've probably felt that way myself on many occasions. And one thing that I find interesting, though, is how those numbers haven't shifted yet. The amount of access to information has increased exponentially. The technology has taken us so far, and the availability to the average retail trader, you would assume that they would shift ever so slightly, but they really haven't. Even from data and reports given from other brokerages and all kinds of brokerages and different elements of the industry, whether it's futures, options, or Forex, for example, it all relatively is the same. Why do you think that is?
Okay, now there's a fallacy right there. Information is not going to necessarily help you trade. It's how does the market react to the news? What new information do you think that you are privy to that the big boys don't already know a long time ago that hasn't been leaked out of government offices 2 months earlier by the CEO?
As someone that knows people in high finance, I won't name any names, but the way that they phrase it to me is by the time that you're reading stuff in the news, we've already been known it, right? we already know and have acted on it. So people that trade the news like that, it's always funny to me, right?
How is information of that type of data helpful? It's a distraction. It's going to cause you to make unforced errors. Now, here's a different side. Information such as the amount of volume that comes in on each 5-minute bar. That's constructive information. When I first started trading for the first 10 years, we didn't have that in the futures market. Volume was not transmitted on a timely basis. So you learn to trade without volume. Did it ever make a difference in my trading? No, because volume is highly correlated with the range of the bar. And volume is also highly dependent on time of day functionality. So ultimately, your job as a trader is to strip away these redundancies, so that you're not getting same sources of information from 2 different types of feeds. And if you can just reduce that down and keep on reducing that down, that's ultimately the journey, I think, of most traders, that they start off and you play with indicators and you try different things. And there's nothing wrong with that. It's all good. It's all part of exploration. Let me look at Ikimoku clouds. Let me look at point and figure. Let me look at Renko bars. All these different things. Because it draws you into different ways of processing data. There's nothing bad about it at all. And then pretty soon what you see is you might arrive at your own little thing. And then the next 10, 20 years, it's reducing it down and getting rid of things and simplifying things. And then you start to realize it's just a big game of money flows, how much liquidity is out there. And that's the main driver, not a stochastic or this or that. So, and everybody has their own journey, and I'm speaking just from my own experience. So,
well, what do you think in terms of the increase in educational content and educational information that's out there as well? Like, the access to information on that side of things also. Yet we still don't see a change in those statistics in terms of, profitable traders and not.
So what does that tell you?
Yeah.
What does that tell you? I think that the markets are the best teacher, and I think that we do our best learning on a walk-forward basis. So if you're determined to accelerate your learning, reading more books and taking more courses is not the answer. It's okay to take one course. It's okay to, I love the old books that were written, 100 years ago. I mean, you can't beat Schabacher in terms of basic technical analysis, or I don't know, Edwards and McGee. What more is there to say after that? There's support, there's resistance, there's trend, there's acceleration and momentum or deceleration. That's my class in technical analysis for you. And time of day functionality. But all joking aside, you can just take those basics. And if you sat down and each day, what do I think is going to happen the next day? Is there a chart formation? Where would I place my buy or sell stop to initiate, if I'm going to initiate that way? On a walk forward basis, And that's a notch above paper trading, because paper trading has this little air of not as much thought put into it. But pretend that you are putting out a fax service or a traditional service for somebody with your recommendations for the next day or what to look for. See what happens, and then the next day do it again, and then the next day do it again. So it's all this walk forward learning.
Kind of what we do, right? Kind of what the juice box is in a sense.
And this is really the way that people should start. Learn one thing, do nothing but that for 6 months. Don't overwhelm yourself with all this data and sensory stuff that takes a long time to learn how to process. It really takes an incredibly long time to process all this data coming in. Start off with one simple thing. Maybe it's,
it really doesn't, though.
I'm going to look at the morning trend 30 minutes after the NYSE has opened and to Europe close. I'm just going to give it this little 2-hour window. I'm going to pick the top 3 relative strength leaders. It could be futures if you're doing that arena, or it could be stocks if you're doing that arena. And I'm only going to concentrate on catching a little continuation pattern during that very specific time frame. Now, do that for 6 months. And only then should you start to add. But everything you're learning is on a walk-forward basis. And then you see what it looks like when it doesn't work. And then you can say, well, why didn't this work today? Maybe because we're waiting for FOMC results and there's no volume in the market. So if you don't have volume, you don't get those continuation patterns. And so, in my opinion, that's how the learning process should really go. And the rest, I mean, you might pick up something here or there. I mean, there's no such thing as a bad course or a bad book. You can find something in everything, right? But this process of reading yourself silly, you know, and that's why I think that those Market Wizards books were such a smashing success. They're not teaching people, you know, how to do technical analysis or trade. They're showing that here's all these different people. They have all unique styles. They all arrived at it on their own and made it work for them. And I think people just love the thrill of seeing it done by others, you know, like knowing that you can run that sub 4-minute mile. So
it's like proof of concept, you know, it allows them to have, it almost in a sense is like being able to have an example is so powerful, because then it gives you, or at least feeds some form of self-belief. Because I know a lot of traders, you know, from my interaction with them again, and I've mentioned this a few times to be fair on the podcast, is that because they're very isolated and not really, and they might even be in the community, but they don't know with confidence if this person, you know, is legitimately making money from trading. And the reason I say that is because I think that's where as you said, the Market Wizards books really changed things, was because everyone had trust knowing that, you know, we know Jack, you know, his system of verifying all his people highlighted in his books is very thorough. And, you know, people then were able to have live examples of people who have really actually, you know, made trading a full-time career and at a very high level, and therefore knowing it's possible is a very powerful thing. But one thing that I also like to highlight from that question that we just answered is, I think a lot of people, there isn't such thing as a bad book or a bad course, as you say, but what I think the mindset is, or the problem is...
Don't do a juice box after this and get out of here. So far, looks like we're going after getting that close, yeah? So far, so good in that regard. Yeah, damn.
Is that the traders are constantly looking for the very best thing. They're looking for the holy grail. They're looking for the thing that will give them super confidence in the markets. So essentially almost trying to hunt something that doesn't exist. But equally, they assume a lot of the time, I believe, that things have to be complex. It has to be a complex system because the markets are complex. The markets are so hard. So, you know, the natural way of thinking of that is my strategy must replicate that. Well, as I know, you're very, you promote a simple method, simple concept. But as you just mentioned there, is focus on one thing and learn. And what I found is that a lot of people may join a course or read a book. And what they do, though, is instead of actually taking the time to learn it first properly, understand it first properly, and then start to apply, they'll try doing both at the same time, where they've literally just watched the video, they're applying it instantly without actually having the nuances, without actually understanding maybe some data. And then they wonder why that doesn't work and they jump to the next thing. No.
And guess what? That's been going on for 60 years. It's not a recent phenomena. I mean, what do you think the old bucket shops in the 20s and 30s were? And, you know, I mean, all these people, Wyckoff, you know, they all wrote newsletters back in the day, you know. So, but ultimately, you know, you get exposed to new ideas. There's nothing wrong with that. It's part of the process. You know, it's fun. There used to be a period where people here in the United States would go to conferences. You know, the TAG conference, which was Dow Jones Telerate, and then there was the Money Show, and there were these live conferences because there was not the internet and online trading. And you could go and you could hear different speakers and see what sort of suited your style and get exposed to different ideas. And then you would carry that back home with you and, you know, perhaps subscribe to Steve Moore's MRCI's seasonal program and then see how you liked that or this, you know, this style. So there's nothing wrong with that. It all comes down to you have to do your own work. And people are just freaking lazy. They just don't want to do their own work. And for me, you know, if I am trading full tilt boogie, which I'm not right now because I'm kind of enjoying doing some other things in life, but it would dictate that I need to spend 1 hour minimum every evening logging my numbers, preparing my trade sheet. And I'll go through periods where I'm like, oh gosh, I've got a 3-week stretch here. I can, you know, maybe I'll just have some fun really getting into this. You know, I had a couple surgeries on my arm and elbow where I couldn't do other things. So I'm like, okay, this is a good time to, you know, really get back into it. But I still had to sit down every evening for an hour and prepare it, you know, for the next day. And then my research just never
right,
stops.
guys, plan and prepare at all times. Right, making the juice box every day, planning this shit out, going over all the hypotheticals every fucking day. Ain't nothing catching us off guard out here, boy.
I automate this, you know, OCO trailing volatility stop on, you know, CQG and blah, blah, blah. So I can put the trade on and leave, you know, for the day. And what are the particular conditions that precede that? And can I identify those through a linear program, or do I want to bother with AI, you know, some type of machine learning type thing, which I really don't. And, you know, so it's just, it's like sitting down and doing jigsaw puzzles every night. You have to enjoy that. But generally, as a general rule of thumb, most people don't want to do the work. They'd rather sit and watch the Netflix series or the, you know.
Yeah.
Yeah, right.
No, they definitely do. They definitely do. I think it really does boil down to that work and being extensive. Going the what some might class the extra mile, which I imagine you would class as that's just the work itself. That's not going above and beyond. For example,
no, that's what you do. Yeah. I think any entrepreneur will tell you, anybody that has their own business, including you, there is. They're not 40-hour work weeks.
I don't think there's. Yeah, definitely not, especially with this tool. You know, we really it's strange because, as I said, that above and beyond, for example, is the norm. But that is almost the benchmark, you know. And then, you know, above and beyond would be going out of. If anything, there isn't a time or chance to have an element of above and beyond because you're already giving it your all, you know. One thing I did want to ask you, and I think the audience would be annoyed if I didn't ask you, which was the term that you coined, which is the turtle soup.
Turtle soup.
Yeah,
okay.
Which is I don't know if you know this or not, but it's a phenomenon over the last year or two in particular because someone's tried to not hijack it, but essentially, you know, coming up that they've created this concept. But what are your thoughts in terms of, you know, developing concepts and creating strategies? You know, what is the process of going about doing that?
The turtle soup came about when I was writing the Street Smarts book in 1996 with Larry Connors.
What is this?
And we were just joking around about everything, having a good old time. And turtle soup was tongue-in-cheek because at the time, that turtle strategy of trend following, buying the 20-day highs, you know, had been popularized. And so we're like, well, when that fails, it's turtle soup, chuckle, 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 right? So that's where that name came from. Now, when you test this, because people don't do their own testing, but it's very important to model these things, you'll see that the longevity of that signal is about 1 day. So it doesn't forecast necessarily that you're going to have this huge reversal in the opposite direction. You might get that 1 out of every 4 times. But, you know, that's something in modeling that I always do. I always model the frequency of occurrence. I model the delay. In other words, like, let's say, for example, you're modeling a trend following system. I want to know that there's not going to be a significant deterioration to the results if I enter a day later. Okay, how much is dependent on you entering within what type of window? Okay, so, and then you want to see, like, the decay, you know, how much impact does that signal have, you know, on the close, the next day's open, the next day's close, so forth and so forth. So it kind of is like building these actuarial grids all the time. Yeah. So that's that behind turtle soup. So just because there's this play around there and it reverses, it can come back up, you know, the very next day, as did coffee, you know. Yeah. So the other thing is that this game is very much semantics, and that's what makes it fun. So I'm sure a test and a failure test, you know, you have Wyckoff with his springs and upthrust, you have Expandeo is to be or to not to be, you know. I mean, there's like a zillion different little things, and there's none of it's like copyrighted or trademarked or anything like that. It's just make it a joke, you know. I don't care if somebody wants to you know, call it their own. What do I care, you know?
Exactly, yeah, no.
I don't have any ego in that area, you know. Oh, knock yourself off. You want to have the Grail too? Fine, take it. It's yours.
Do you know, in terms of your trading, how much of it was mechanical versus discretionary?
Oh, it was 100% discretionary. Yeah, 100%. I have done some mechanical trading when I had my fund. I had a couple little separate profit centers that were volatility breakout systems because that's one of the very few mechanical systems that has an edge, although it has a ridiculous amount of variance, you see. So you have to know the nature of the beast that you're dealing with.
Interesting statement right there.
I just thought it would be an additional overlay. I learned a lot by trading the volatility breakout system. I actually had somebody else doing the execution on that for me. But net, it only added about 1% to the bottom line. And I'm like, that's just not enough to justify all the overlay of costs and time and work and energy. So I would say 100% of my trading is discretionary, but it's all around models. So, and I test my models. Most of them
No,
are,
funnily enough, the algorithmic
enter
trading
on
that
the
I do
close,
is
or
like
if I
something
enter
along
on the
those
next
lines.
day's
Coincidentally,
open, so
never planned it to be it, but it's funny that it aligns with her statement like that.
then what would the computer do? And then I can have a benchmark to judge myself against the computer. Most of them also just have two variables, maybe two variables and one filter. So they're durable and robust. The stuff has held up for 40 years. It's all the same stuff I do now. I've been doing, for all these years. And the sophistication part might come in, do I want to trail a stop? I'm doing that a lot more because I can just walk out of the office then and, set it and forget it. I don't do it that much. I put a lot of time and energy and development into this, but it's still, I like being in control.
I like that. And one thing that I've sort of tried to pick up on from our conversation is how focused you are in terms of collecting data, reviewing your trades, and almost making decisions off the back or creating models off the back of data. How important as a trader is that?
I did it in the very beginning. I really haven't done it for 30 years. I mean, I have updated my models. I'll occasionally run them to see if the stats are still the same. And when I do my modeling or my testing, I do it in 3-year blocks. So I'll do, 2000 to 2003, 2004 to 2006, 2007, just so I can see if there was a unique event that led to outperformance in a particular market. For example, natural gas at one point before we had fracking, had some insane moves on some of these mechanical systems because it was hurricane season in the Gulf, and then that went away. But I don't want to include that in my results going forward. And, another thing that people forget is we have bull markets, bear markets, dead markets in just about every market that's traded out there. So I think it's really important to test in blocks. And then the last thing is that people far underestimate the importance of sample size. And I see people drawing conclusions off of a sample size of like 26. I'm like, huh? Like normal statistics would tell you that in order to get a decent confidence factor, meaning some validity to your idea, you need a sample size of around 36 or something if you're just looking at traditional standard deviation models and so forth. And no, my experience says you need a sample size of 300 before you can go about trusting anything, which isn't easy.
not even, right?
You might not have that frequency of occurrence, but then that's where you have to say, well, I'm going to look across multiple markets. That will build up my sample size. Now, is it a true principle of price behavior? Aha. Yes, a market is a market. Doesn't matter if it's a market in cows or a market in corn or a market in bonds. They have their subtle nuances, of course, because of liquidity provisions and commercials and seasonality and stuff. But, markets all behave very similarly in that they are driven by people and supply and demand. They tend to overshoot to one side and overshoot to the other side. That's Soros' theory of reflexivity, which he did not invent, but became popularized from him. And then all markets go through periods of positive feedback loops, and then tremendous periods of noise. So those are the common denominators with just about all markets. And if you understand that and can then understand the importance of putting things in context, which is really where the experience level comes in, understanding the context. A continuation pattern is not going to work in a range-bound market with too high of a noise factor. But a continuation pattern, if you're so lucky to get one in a market that has these positive feedback loops, it's like gold, and you're probably not going to get one because that's why it's a positive feedback loop and it leads to that parabolic acceleration. How do you trade that? Most people don't know because the frequency of occurrence is much less. So we don't know how to deal with these events that come along that we just haven't seen much of. So see, now you understand how you can study this stuff till you're 97 years old with one foot in the grave. And we could talk all day long here.
Definitely. I want to finish up with just one or two last topics with you. But one in particular was, of course, the range of size that you would trade. The element of risk and profits and the general size of the trades that you took across your career would have dramatically increased over time. And, did you ever find any challenges or any key lessons from that evolution?
Well, I hate to say it, but my trade size was much bigger the younger that I was. Oh yes. So this is very common too. That the younger you are, the more variance you have in your bottom line. Most people would be more like loose, aggressive type of traders, and then as we age, we become tight, aggressive type of style of trading. And but I, especially when I started to manage money, firmly believe in an even bet size. So what I did is I reduce everything down to the average dollar range of that particular market. And I redo this on a quarterly basis. So for example, if the average dollar range of a corn contract is $600, but the average dollar range of a crude oil contract, is $3,600. Well, I can trade 6 times more corn per unit size than crude. So I reduce everything down to a unit size. Now I might say, okay, for each $100,000 I have in my account or my program, that will buy me 1 unit. Okay, so now for every $100,000, maybe I'll trade 6 corn, but I'll only trade 1 crude oil. All right, and so now you just keep on multiplying that for every $1 million, for every $10 million, which makes it very easy when you're managing money and funds are going and coming and going. And then you have to be mindful of correlation. And it's not just correlation between gold and silver or the indices or something like that, but you also have to be extremely mindful that correlations break down when there is an outlier event. And that's where people really get into trouble, thinking that they have a diversified trading portfolio, but no, it's just Katie bar the door, liquidate everything, throw the baby out with the bathwater, you know? And so that's where you need that cutoff for your account and say, if my account balance drops down by more than 10%, everything's getting closed out. Because you don't know if there was a nuclear blast or a tsunami or what's happening. So all of this is in a greatly neglected area called risk management. And the last thing that I'll say with risk management is that, because everybody likes to talk about entries and exits and all the little fun things, and I don't know how much time you have. I've got one story for you if you still have time.
Of course, no, don't worry.
Okay, but this risk management thing is not just about the leverage that you use, the stop, the initial stop, but also your use of capital, time spent in the markets. So for example, a person that's in the markets, for the less time you are in the markets, the less exposure you have. Put it that way, the less risk you have. So if I'm in the market for 10 minutes and then I'm out, my risk is extremely minimal because I'm not susceptible to any event risk or things along those lines, you see? And so you can go off into so many tangents with this, but it is a really important part of the trading, you know, the time, the risk, and our own mental capital, right? Okay, we can talk about our, you know, actual capital that we have to trade, but we do have to have a balanced life, you know, exercise and eat right and so forth. And
I could speak to you all day, really I could, and I would really enjoy to hopefully do something again in the future.
Done?
And I appreciate you being here as well with us today.
Never mentioned the crypto story.
Drop a comment of your biggest takeaway from this episode. I know there's so much. Links for Linda will be in the description below, so make sure you check those out too. Other episodes are on screen, and until next time, everyone, take care.
Goddamn, we just got. Interesting. Let's lower this a bit and kind of just yap, right? Kind of yap and get going, get out of here. Where's yesterday's VWAP? Is this guy still in the order book spoofing or what? 8400? And to the upside, what's cooking? I mean, in terms of a juice box, right? In terms of the juice box. You know, anyone that was here yesterday, right? You're still in the long chillin'. Shout out to you. Shout out to you. In terms of new trades, though. How's the higher time frame looking? Actually, 1 month should do, right? Put this on the 1 month. Man, this 98 region, glowing. This is what? 888. Okay, well, here's the thing. You kind of missed the ideal entry, right, in terms of the long. We did talk about this kind of taking along in the zone yesterday, so a bit late in that regard now. You know, and I would say kind of like the bullish retest of the zone, which we're kind of getting right now. Only issue with this is like, where would you put your stop here? Because there's a lot of liquidity that ends like right here. Like it starts at the yellow line basically and ends at the single print. So like, suppose you were to just like mark it in an entry at some point here. Like not the greatest risk reward, right? Especially given the fact you have like a poor low left down here. The other thing is like, suppose it becomes top this low, at that point we're kind of like losing this whole zone, right? And then we're doing like a bearish retest of the value area high if we try to reclaim it. Or like somewhere in this region with like the VWAP coming in. So I don't know if I'd be like too keen on like trying to like take this kind of clean and then that. But realistically, it's probably going to be if we end up doing some kind of like 3 drives type thing down here. Or if we do like this, right? Like ding, 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 ding. Either or. The thing is, I don't think too many longs got in down here, right? Last I checked. So there's not really much of a reason to really kind of circle back down there right now to the low. For all the high leverage liquidations. 835 and 829. Yeah, okay, we'll still keep this level in mind, right? Kind of like the 786 from yesterday's juice box. Liquidity grab plus poor low clean. Probably a bit suspicious, right? Because at that point we're kind of doing like the thing we always talk about with the 8-8, the fib. You kind of like come down, and like we bounce at the golden pocket, right? And if we start to like roll over again, a lot of times you start to like nuke through the zone. So also keep the context of like the New York session, right? Kind of the dump on the New York Open. We'll kind of leave that. We'll also leave like the 886 kind of thing that we talked about yesterday. So kind of just go back and watch that. And other than that, it'd be like a retest of the value high in a more meaningful time frame. The bullish retest of the PD value high. And then flipping the golden pocket, right? This 89.1 level we were talking about earlier. So whether it's like this kind of thing, ding, 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 or like this, like flipping this region. You can even wait for the VWAPs if you want. Just for some additional confluence. Other than that, nothing has changed, right? This is basically the only new things going on in terms of the long side of the trade. And for the shorts, probably be mindful of that. Where did it end again? everything else doing? Hmm. This is tricky, right? This is tricky because there's like 2 liquidity clusters here. There's like there's one here, and where's the other one? Is that like 8, 9, 8, 8, 5? So there's like this, and then there's this. In terms of the math, like you'd expect them to both get got. So we're really gonna be watching at this level, right? You already have like the bear diff starting to print. How are all the CBDs looking? It's pretty healthy so far. Probably is the same zone, right? This 89.1k level is gonna be like pretty interesting for both teams. And it's like the Valeria high of like this node, right? And I just say like the bearish retest. Realistically, the better bet, right? Like this kind of region up here. But be mindful that if we do go up from here, right? Be mindful that it might just come tap this one and start to go lower. So if you were to see it do like something like this and head down, then like that is what it is, right? Especially if like these are like rolling over alongside with it, and all the data is supporting this. So just keep that in context because we might not make it there. If we even make it from here, right? It might just start rolling over right now. For the short, from below. Hard to say, right? Because like yesterday's VWAP's like down here, and there's definitely a world where we just come like clean this low and it puts in like a good low and goes again. I mean, it's kind of right now, right? Probably missed it, to be honest. Kind of doing like a 3 drives in a 1 minute, rolling over already. In terms of like getting like the ideal entry here. Yeah, that's a bit of a rough one. Probably give it some time at this point, right? Like see if we start to do this. If we do end up doing like a failed auction up here, then it's probably going to be that. Also like the Valeria high for yesterday, right? And just failed auction at the PD Valeria high. So So I'd be watching for this, how that develops. I'm trying to think of like a world where we come down here and do like a bearish retest into like the VWAP and like the thing we were talking about earlier, basically, like doing a bearish retest into this. I'm not a huge fan of this with like all this like liquidity right here, right? And all these like garbage highs to get cleaned. Like a very realistic world where we come top to low, clean it, and then you start ripping, right? I would be pretty passive with this one from the downside, to be honest. Like if anything, like let it come down, clean the low, and then if it does lose the VWAP and like reject up here, and then start heading lower, you can like take some kind of entry at this point. Cause like there's really not much going on here in terms of like perps liquidity at least. And how's the spot order book looking? Same story, right? All the walls are down here. So and the perp liquidity's down here. So at that point, you do something like this, depending on where your entry is. Like let's say you wait for like the structure change lower. Well, you put it like here or here, up to you, kind of thing. Or even depending on how price action looks, you can get even better. Be something like that. Also shave partial at the value rotation. I haven't been looking at the data too much. I also won't know until we get here, but so far it seems like they're trying to push it higher, and there's like a massive perps. There's two massive. How much is that now? God damn, it's even more now. There's 3,500 Bitcoin sitting down here, between here and here. There's like two big ass buy walls in the book. It seems like they're trying to walk this thing up, so we'll see how that resolves itself. But we'll kind of leave that written down, right? Like kind of just like flipping the daily VWAP and rotating to PD value low. But that one's like not the greatest of setups, right? You're kind of like getting into the middle of this like ding dong. So how would this be looking? Yeah, it's a bit unfortunate, right? A bit unfortunate that we just started doing this now. Kind of missed that. Yeah, I think that should do it, right? I think that should do it. I feel like we're missing something, right? We missed something here. I guess you could, like, in terms of like all this local volume, you could do some kind of like bearish retest of like this kind of region when it loads. A bit iffy, right? POC is like right here. But if we do something like this after cleaning the low. Yeah, not the greatest short setups here, right? To the downside, like ideally, it's like gonna be one of these higher ones, or you're gonna have to like weasel your way in with like less edge on the downside. Not feeling too good about these things personally. Wouldn't be entertaining them too much, right? The real ideal short was this, right? The failed auction up here. If you miss that, it's kind of like shit out of luck for now until something more juicy presents itself, which is probably gonna be this. On top of like the higher time frame areas we discussed, like these are the real juicy ones, right? Up here and the 98 box. Like a lot more going on here in terms of like potential short setups than this. So we'll kind of leave it at that, right? Kind of leave it at that with that context. The shorts from the downside not looking too hot in my opinion, but and in terms of like the higher time frame longs already discussed. So higher time frame long plans have been discussed previously. And same with the shorts, right? Like the stuff we were just talking about at 94, 98, so on and so forth. We've already talked about all this many times, all the way to like 116 plus. To kind of just go back, watch the previous juice boxes, or read through the Discord, because some of the stuff we did talk about while I was not streaming. That should do it, right? That should do it. Also interesting that this thing is showing signs of life while these two are not, right? Becoming a bit uncorrelated right now. So let's delete that. Let's delete that. I mean, and in terms of the trades, we did close out 75% of the shorts. Then I was watching this, right? I was waiting to see if we're gonna close above this value area high in 382 or not. We did, so stuck to the plan. Close them out, so you don't end up round tripping them overnight potentially. And if we do start to roll over, I'm probably gonna be adding back to them. Especially if, like, tomorrow morning's looking hella bearish in terms of the order flow and whatnot. But yeah, like it's not a new trade, right? So like me adding to a short at this point is a lot different than opening a new short down here. It's like I can add risk free, whereas like taking a short here, you do have risk that you get stopped out. So very different context, unfortunately. Those have not been following along. And for the long TPs, we'll see, right? We'll see. We'll probably set some already. We already have an alarm here, right? We'll set another one just in case. Make sure we wake our ass up. Because I don't plan to TP here. Given the context of what's happening, right? We'll kind of review that real quick. If we are going to do a failed auction and we're in the beginnings of it, right? We are in the beginnings of doing it potentially. We're going to see a true sign of strength from the bulls finally. This is the chance. Kind of came down, put in this massive wick on like fucking all-time high volume on the ETF. And now we front run the spot order book twice. Like this first bounce front run the spot order book. Now this bounce is again front running the order book. So and a lot of shorts to squeeze. So and a lot of times, you know, this is the bounce that leads to the failed auction printing, like right at the golden pocket. Ding 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 ding. But level to level, right? Level to level. Let's not get too carried away. Gotta get above this zone for that to be even realistic. So yeah, ideally I don't want to TP here on the longs for this playing out, right? Because if this does start to play out, then like the low is in, right? We now put in the higher low, and we'd be putting in a higher high. How high we end up going, who knows? But quite likely we're gonna finish at least scrapping the red box, right? No point coming back up here again to just leave it behind again, like to do this. Quite unlikely, right? If we're gonna come back up here, like this shit's definitely in the fucking scope. And probably more, right? Because this 98 zone's looking hella fucking juicy right now. Hella juicy. I know everyone's looking at this with their lips watering. Watering. Like, look at this thing. Just toss this bitch on. Boom, 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 boom. Like that's where the real juice is at. So, yeah, very interesting zone, right? So in the ideal world, we don't TP here at all on these things. I have the alarm set, so I'll wake up and see if it happens overnight or tomorrow. I'll be looking at the data to determine, do I want to shape or how much, right? And same story with this, same story with this. If the opportunity presents itself to agree to this, we'll do it. And if not, then we'll be TPing there. And worst case scenario, suppose that we do decide to agree to TP. And it does start to pull back on us. I'm going to be shading with the fib. If it starts to get closes below these levels, I'll like start TPing out of it. At least partially. Because we can always add back, right? If it does bounce after pulling back, then we can just add back. So securing some profit, staying flexible, right? Moonwalking in and out this bitch. Yeah. That should do it, right? That should kind of cover everything, cover all our bases. So a quick chat shout out and get going, because I'm tired. I'm tired. Oh, there's too much of a chat history. Damn, I can't even go back and read the chat. Anyway, shout out to Lyle, shout out to Bebo. I think that was it, right? Aside from Herschel, shout out to Herschel as well. If I missed anybody, my bad. I don't think I did, but I can't scroll back anymore. So that's that. In terms of the chat shout out, kind of it feels bad. Also feels good. Quite the active chat, I suppose, in that case. Shout out to you guys. Yeah, we'll be back tomorrow, kind of usual time, the daily candle close or so. Yeah, I'm out here. I'm tired. Time to get some rest. Call it a night. We will see each other again soon. Hopefully these trades keep going nice and juicy. Everything works out according to the plan. I'm out here. I'm exhausted. Later.